Business Standard. She has ambitions of becoming a brand. Business Standard. He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming a brand. Business Standard. He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming a brand. Business Standard. He's making his investments talk. Business Standard. He's making plans for an early retirement. He's making his investments talk. Business Standard. Business Standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming a brand. Business Standard.
पापा योगा टाइम।
आज बच्चे भी इम्यूनिटी स्पेशलिस्ट बन गए हैं, विटामिन एबीसीडी के एक्सपर्ट्स बन गए हैं।
पापा डन।
क्योंकि ये सब जानते हैं कि जब हेल्थ की इम्यूनिटी बढ़ती है तो हम सुरक्षित रहते हैं। इसी तरह हमारी फाइनेंशियल इम्यूनिटी यानी फाइनेंशियल सुरक्षा बढ़ने से हमारे अपने सुरक्षित रहते हैं।
SBI लाइफ का पूर्ण सुरक्षा प्लान जो दे लाइफ कवर और 36 क्रिटिकल इलनेस की सुरक्षा और बनाए रखे बैलेंस बढ़ती उम्र के साथ।
इन दिनों ने हमें समझाया है कि मुश्किलें कभी बता के नहीं आती, और जब बात हो अपनों की, प्रोटेक्शन जरूरी है सबके लिए। HDFC लाइफ के टर्म प्लान्स विद 1 डे क्लेम सेटलमेंट अपनों का फ्यूचर आज प्रोटेक्ट करें। HDFC लाइफ, सर उठा के जियो।
He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming a brand. Business Standard.
पापा योगा टाइम।
आज बच्चे भी इम्यूनिटी स्पेशलिस्ट बन गए हैं, विटामिन एबीसीडी के एक्सपर्ट्स बन गए हैं।
पापा डन।
क्योंकि ये सब जानते हैं कि जब हेल्थ की इम्यूनिटी बढ़ती है तो हम सुरक्षित रहते हैं। इसी तरह हमारी फाइनेंशियल इम्यूनिटी यानी फाइनेंशियल सुरक्षा बढ़ने से हमारे अपने सुरक्षित रहते हैं।
SBI लाइफ का पूर्ण सुरक्षा प्लान जो दे लाइफ कवर और 36 क्रिटिकल इलनेस की सुरक्षा और बनाए रखे बैलेंस बढ़ती उम्र के साथ।
इन दिनों ने हमें समझाया है कि मुश्किलें कभी बता के नहीं आती, और जब बात हो अपनों की, प्रोटेक्शन जरूरी है सबके लिए। HDFC लाइफ के टर्म प्लान्स विद 1 डे क्लेम सेटलमेंट अपनों का फ्यूचर आज प्रोटेक्ट करें। HDFC लाइफ, सर उठा के जियो।
He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming a brand. Business Standard.
पापा योगा टाइम
आज बच्चे भी इम्यूनिटी स्पेशलिस्ट बन गए हैं, विटामिन ABCD के एक्सपर्ट्स बन गए हैं,
पापा डन
क्योंकि ये सब जानते हैं कि जब हेल्थ की इम्यूनिटी बढ़ती है तो हम सुरक्षित रहते हैं। इसी तरह हमारी फाइनेंशियल इम्यूनिटी यानी फाइनेंशियल सुरक्षा बढ़ने से हमारे अपने सुरक्षित रहते हैं।
SBI लाइफ का पूर्ण सुरक्षा प्लान जो दे लाइफ कवर और 36 क्रिटिकल इलनेस की सुरक्षा और बनाए रखे बैलेंस बढ़ती उम्र के साथ।
इन दिनों ने हमें समझाया है कि मुश्किलें कभी बता के नहीं आती, और जब बात हो अपनों की, प्रोटेक्शन जरूरी है सबके लिए। HDFC लाइफ के टर्म प्लान्स विद 1 डे क्लेम सेटलमेंट अपनों का फ्यूचर आज प्रोटेक्ट करें। HDFC लाइफ, सर उठा के जियो।
He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming a brand. Business Standard.
पापा योगा टाइम
आज बच्चे भी इम्यूनिटी स्पेशलिस्ट बन गए हैं, विटामिन ABCD के एक्सपर्ट्स बन गए हैं,
पापा डन
क्योंकि ये सब जानते हैं कि जब हेल्थ की इम्यूनिटी बढ़ती है तो हम सुरक्षित रहते हैं। इसी तरह हमारी फाइनेंशियल इम्यूनिटी यानी फाइनेंशियल सुरक्षा बढ़ने से हमारे अपने सुरक्षित रहते हैं।
SBI लाइफ का पूर्ण सुरक्षा प्लान जो दे लाइफ कवर और 36 क्रिटिकल इलनेस की सुरक्षा और बनाए रखे बैलेंस बढ़ती उम्र के साथ।
इन दिनों ने हमें समझाया है कि मुश्किलें कभी बता के नहीं आती, और जब बात हो अपनों की, प्रोटेक्शन जरूरी है सबके लिए। HDFC लाइफ के टर्म प्लान्स विद 1 डे क्लेम सेटलमेंट अपनों का फ्यूचर आज प्रोटेक्ट करें। HDFC लाइफ, सर उठा के जियो।
Hello everyone. Welcome to the final rounds of Unlock BFSI 2.0. Some very interesting sessions with leaders from the economy, fintech, and mutual funds have got us here, trying to decode the new normal for the BFSI sector. We have 2 sessions with heads of general and life insurance now, and tomorrow morning at 10:30, RBI Governor Shaktikant Das will share his vision for the BFSI sector, followed by a fireside chat with Business Standard and panel discussions with leading bankers. You can watch all of these at bs-bfsi.com. We will take a few questions for the panelists after the initial discussion. Please send them in the questions box on the website or as comments on Facebook if you're watching the Facebook Live. For social media conversations, use the hashtag BS_BFSI. I would now request Mr. Tamal Bandyopadhyay, our consulting editor, to start today's discussion.
Thanks, Manish. Hello and welcome. Good afternoon, good evening, good morning, depending on which geography you are in and watching this show. We have this general insurance panel with 5 of the best minds. There's a general tagline is this: insured and be safe, and that shows the backdrop when we are discussing this. Under normal circumstances, there have been time to discuss what would be the foreign investor stake, should it go up, or what the investors are looking for, and financial ratios and all. But this is a COVID time, and I would like to believe that most of the large part of the audience and thousands of them are watching. They have their common interest, and questions are all about what's happening in the segment, how to remain safe, and what to do in terms of protection, in terms of products, in terms of claim settlement, so on and so forth. So, gentlemen and the lady, we will primarily discuss those issues. We wish to discuss also, we could have discussed on what's happening in the public sector industry, because there have been talks about merger. Now the government in the budget, they have kept some money for recapitalization. So is it good money after bad? But since we have no representation from the public sector entity, we'll drop that also. So generally, look at the consumers, there's the audience, and we'll start with that. So let's start with Anamika. No, I don't have a gender bias, but still let's start with this. So, general insurance is health, motor, property, cyber, travel, so on and so forth. But all of you, either exclusively or largely, are into the health segment. So, and this is COVID pandemic is a health issue. Can you give us a sense, what is the new landscape of general insurance industry?
If you ask me, about 2 months back, I said health is the new motor, because health insurance is now being pulled, unlike typically it is to push it, but not to the extent we thought it would take shape. However, the inquiries are much more than the purchases. The COVID definitely has nudged people to think about and be safe. See, what happened is the recovery rate is being fairly good. Also, the government took a lot of initiatives at the initial start. So the expenditure on COVID initially did not seem to go out of anyone's pocket. So the inquiries for future health has become more predominant than the current purchase of the policy. However, we started getting a lot of inquiries on different modes of settlement. And one of them is being at home quarantine. So the regulator very timely stepped in, and we now have products which are very different from what we have otherwise traditionally issued. And these changes are going to be here. And I'm sure this will now push us to discover more of very short-term, short-tail health products. This is one side. Motor renewals definitely has seen a slowdown, because people would like to save more money for their regular use, instead of, because they feel that renewal may not be effective right now because they're not taking the vehicle out. However, standing vehicles can also catch fire, so it isn't prudent not to insure or renew your vehicles. And the third is the industry segment. I think there is a bit of a worry there. The kind of policies one has purchased. So they were worried what's going to happen with a closed factory, how if catches fire, is there were kind of queries, and we did address in most of the issues. So the landscape change is definitely the health will be a predominant sector.
Thanks, Anamika. That's the preliminary remarks. We'll get into the micro issues later on. So let's ask Nilesh. Generally, the same sense. How do you see the spanning out?
Thanks, Amal. Big hello to everyone. Good afternoon here in India. So my couple of comments on insurances, while this is a very large pandemic and a big human disaster, but there is a positive coming out of every negative. One thing what has happened in India, which is a country which is very underinsured, and underinsured in every segment, health, motor, industrial, it is significantly underinsured. I think it has made the customers aware of insurance. I believe, that in India, customers, were not in the habit of paying for risk. And somewhere, the customers always want to do a return for their investment. And that has fundamentally changed, into my mind, in this last 4 months. So whether it is resultant in, better SME protection, better health insurance, better, motor coverage. So I think that is the big positive out of this pandemic. The second point, I would say, the big change which will happen is that customers have suddenly become much more aware of risk, and they are no longer looking at the lowest price. So somewhere in India, again, if I may make a general comment, customers always, used to look at, any insurance comparison, the lowest price. So somewhere I think, customers are becoming much more aware of the quality of coverage, the insurance company behind it, the balance sheet strength behind it. So that's becoming much more important. So I think Indian customer has become much more mature in this entire pandemic, and there is much better risk awareness. So these are my comments.
Thanks, Nilesh. Nilesh is from Tata AIG. Sorry, I did not introduce any of you properly just to save time. And you don't need any introduction. So let's Rakesh Jain from Reliance General. Again, the same sense, both of them, both Anamika and Nilesh thing is this. Actually, this is the time. Maybe we are prima facie on ground. We are saying the business is, getting dented in terms of volume, but customers' awareness is growing, and insurance in India becoming. Rather, it's not a push product anymore. It's a pull product. People are coming to you because they have understood the importance of being insured. That's two of you. That's generally what you said. Yes, Rakesh. Rakesh is from Reliance General.
So good afternoon, everybody, and thanks, Tamal, for having me here. And obviously, this is such an event. This has impacted everybody, and in various ways. I think if you ask me, it is obviously a human tragedy, and we would never wish something like this to have happened. But if you see from insurance, it's an insurance positive event to have taken place. Most of us, like in the 20 years I've spent in general insurance, we have always struggled to create awareness. And we have always said that demographics here works against insurance. And, we never thought young people would be excited to buy, covers for themselves, even early on. And you always felt health insurance means anti-selection. Old people will come and buy when, there is a high probability of, claims. These are the classical things, which kept on happening. And you would see in the first decade of the opening hour, there was hardly any GI company focusing on growth of health insurance. And most of them were loss leaders, in any way. So, in some sense, health as a subject has only started to gain momentum in the last 5-7 years. Some bit of credit should go to the standalone health companies, which really propagated that. But overall, I think most of the general insurance companies now see this as a turning point in the risk awareness to start with. And I must take this opportunity to say that the risk awareness, first of all, I see very heightened in consumers, the people who would want to take insurance. And I think that clearly puts us into a very strong, advantageous position, because when people come and seek things, they invariably end up with what they need. It also cuts down, the challenges with insurance companies face in reaching out to people or in also promoting a right product, which are in some sense the basics of, selling any financial product. The second thing which I personally feel is this is something which is also building in a lot of impact across health, across property. Like in property, you see, Nilesh mentioned SME. The biggest thing people faced basically is there is there's no supplies, there is loss of profit. People don't know what to do. And there are catastrophe times. This is monsoon time. So you can be impacted in various ways. Even, marine claims are rising. So, health, property, if you ask me, everything has got impacted at the same time. And that also gels well when we eventually look at a customer-centric approach as against a product-centric approach in times to come. So I think this is overall a good awareness thing. I think the real task is to now take this and really work on that.
Thanks, Rakesh. So you actually said that it's a big positive for the industry in terms of you don't need any marketing agent anymore. COVID is the marketing agent. The pandemic is the marketing agent for the industry generally.
See, my only take is I keep telling, today also I keep telling my boys, we were talking about sanitization. I said the important point is next 6 months we do. The real test is once this thing goes away, how much we are able to carry it through. And that is the $1 billion question, if you ask me.
Okay, we'll get into all the we'll cut it and into various parts. So let's hear Anuj. Anuj is from Religare Health, which is exclusively health insurance. Yes, Anuj.
Thank you, Business Standard. Thank you, Tamal, for this opportunity to be here. Good afternoon, all the guests who are listening in. we've all spoken about the unprecedented scope of this pandemic. We've spoken about the heightened awareness and the risk perception amongst the customers, and it is logically leading to growth for health insurance in the country. I think another aspect that I want to talk about is I think we sometimes, I think there are always enablers, even through times like this, which help in growth of the sector. And I think in our case, one very strategic and important enabler has been the support that the industry has seen from a very proactive regulatory body. Right? Just the way they have thought through every aspect of health insurance, right from product. A standardized product called Arogya Sanjeevani was launched by all insurance companies. They immediately said COVID is covered. Then they said that customers are looking for low-cost COVID-only premium products. So COVID Kavach, COVID Shield, and so on and so forth was standardized, and all insurance companies launched those plans and made them available through their distribution. We allowed for renewal. They said that customers may have trouble renewing. So instead of, let's give them a grace period for renewing their policies and so on and so forth. On the side of claim to build confidence and trust, they came ahead and said that every COVID-related claim must be approved within 2 hours and so on and so forth, right? What we've seen is a very proactive, and I think that has inspired. That again has given confidence, built trust with the distribution, with customers, and in some ways helped us to be able to focus us much more on our execution. So there are many things that are coming together for this growth. And I think that's a very important element that I wanted to touch upon in addition to what my industry colleagues have spoken.
Thanks, Anuj. Very, very useful points that you made. And we'll, of course, get into all the different, micro products, etc., which make sense for the consumers who are watching this show. For them, we'll get into the details. But general first round is general talk about the landscape and changing. And I hear that all of you are seeing it in a very positive sense. This is sort of turning point, the moment of truth for the industry. It will give a big booster, the awareness, so on and so forth. Bhargav, you have the last word in this round. Tell us something new, not what they are saying.
Well, thank you, Tamal, for inviting
Bhargav
me.
is
And
from ICICI Lombard.
So, Tamal, thank you for inviting me and throwing the googly at me, because I don't know what more to add to what my colleagues have already talked about. But let me start by again, wishing all the viewers a very good afternoon from India. So, obviously, I think the points that my colleagues have made are all valid. And if you look at the industry, the retail health numbers, I mean, at a period when every industry struggled, the retail health numbers have grown, roughly by about 30% in the first quarter. But if you look at the aggregate industry numbers, and I'm just doing this to balance the perspective, because we've just talked about the positives. But if you see the industry growth number, the industry is degrown by about 5-6% in the first quarter. So if you look at certain segments, like for example, motor, we've had a degrowth. The second thing that we have to keep in mind is the growth in health is coming with very rapid increase in the claim frequency that we are seeing, particularly from this, this virus, which is understandable. And as an industry, we could have taken a very convenient, convenient stand that pandemics are not covered, and we could have avoided these claims because we never priced for these claims. Right? No one knew about COVID. These were existing products that we had priced based on past data, and we had launched them. But we decided as an industry to support our customers, and rightly so. But it comes at a cost to the industry, which is all part of our business as we see it. And as I said, we think this is the right thing to do for the industry. The main point that I want to talk about. So this is just to balance. There is growth, but there is also a bit of pain coming from some of these other aspects. But the main point that I want to talk about is something that Rakesh talked about in terms of, is this a permanent change, and what is the behavior shift that we are seeing, and what is the consumer psyche going ahead. One is the risk perception that everyone's talked about, and there are some studies in the region, and India is the second highest percentage of people who are searching for health and buying health after China in this period, done by a global reinsurer. So clearly in India we are seeing the traction. But the point is how stable and how long term will this be, and we will have to watch for that as we go along. So a lot of people have bought these COVID specific products this year. Will they renew 1 year later? That's $1 million question. Number one. Number two, how do people want to consume the health service or any other claim service? I think we believe that there is a structural shift that has happened, and we as an industry need to gear up for the structural shift in terms of contactless service, digital health, in terms of home-based care that Anamika touched upon. Now, how well are we as an organization, as an industry gearing up for that change will determine the adoption going ahead. Because while at this point in time, no one wants to go to hospitals when it comes to health, our belief is that in the future also, if we can provide a convenient platform to consume healthcare at home, people will take those services. That is a convenience that people will want to continue with. If you can provide telehealth services, people will consume that service. And in that context, we are, at ICC Lombard, we are very happy to see the National Digital Health Mission. If you can scale that initiative up, we believe we can leapfrog, as a country in terms of digital health. And that, in my mind, can help this industry tremendously going ahead. So I just wanted to add a bit more balancing, inputs to the discussion, as also talk a bit more about the changes that we believe we will see going ahead in the long term.
Thanks, Bhargav. So we'll now get into specific the changes and what is there for consumers, and so we'll make it shorter and crisper. And on a lighter note, as all of you have said that this marketing part is taking care of COVID itself, the creating awareness, and that how does one make out, because none of you have your banner or the branding at your background. Typically, when you are representing an organization, you want to take that opportunity in the space to have your branding there. But none of you, 5 of you, are just at your home or office, but there's no banner because you don't need any more. COVID is doing that. So anyway, Bhargav, I'll start from where you ended. Is this the new? You spoke about technology, contactless. Now, whenever it comes to banking, we used to talk about fintech. Now we talk about tech fin. The Google Pay and Phone Pay, and now WhatsApp is coming and all. Rarely we talk about insurtech. In insurance, also technology is playing a very critical role. And during this kind of time, both for getting policy done and also the checking my health, what exactly, whether I'm lying or not, without the physical examination, fixing that device on me, to the claim settlement. So insurtech is now coming of age or playing a very critical role. So we'll start with Anuj probably. Can you tell us, our audience, that what's the role the insurtech is playing, and how you're saying this contactless social distancing time, how this industry is, in the insurance industries is preparing itself?
See, Anuj, thank you. The big advantage we have as an industry is when we collect money from a customer towards premium, what we give them is a promise to pay. It's a piece of paper, right? And which can be delivered digitally. There is no physical product that we deliver as an industry to a consumer. So from that standpoint, all of us are digital businesses in that state. Through this phase, March 17th, 18th and onwards, as we went into a lockdown, I think I'm amazed at how not only us, but every one of the insurance players very quickly adapted. And not only us adapting, our distribution adapting. So while digital only businesses, which is customers coming directly on our website or web aggregators and so on and wanting to buy and inquiries going up, obviously increased. But even what were thought of as traditionally physical distribution channels, individual agents, banks, and so on and so forth, very quickly bounced back after the first week or 10 days and moved to digital only. I was amazed at how agents would make videos and be able to publish them to their customers and then give them a digital link where they could come back and pay and be able to buy policies and so on and so forth, right? So very quickly, the whole ecosystem adapted to this newer way of doing business. What again amazed me was about the claims administration side. So we would never have imagined that our medical doctors and claims teams could work out of home be interacting with hospitals, and being real-time being able to approve claims for customers. The second thing, customers themselves being able to take a photograph, being able to upload on an app, basis which reimbursements coming in and insurance companies paying off claims. So I think just the level of technology that all of us have been using, and in times like this we've been forced to use, has amazed me. And I think it's been very, very positive. And to my mind, while the questions that Rakesh and Bhargav raised, that we don't know how this awareness plays out in the future, my sense is some of these are long-lasting changes that are going to stay with us. Just bringing that much more efficiency in every aspect of our operations.
Thanks, Anuj. So any of you want to add this in terms of newer products and changing customer behavior and use of InsurTech? Yes, Nilesh, you said.
Yeah, the comment I wanted to make was, so there are, a lot of the way India is digitally, I think is changing very fast. We've got a very, much, much better connectivity than what we used to have in the past. Second is, today, a lot of ecosystems and data ecosystems, whether it's Aadhaar, whether it is Vahan, whether it is Insurance Information Bureau, so those data ecosystems, or even credit bureau exist, which never used to exist in India before. But to bring about this digital revolution, Tamal, one of the biggest missing points was the customer fear psychosis and customer behavioral change. And which, to my mind, has been this particular pandemic lockdown has triggered that in the customers, all customers, irrespective of age, irrespective of gender, have been able to overcome their fears, apprehensions, and have been able to do transactions successfully over their mobile phone, their tablets, their laptops, or digitally. So that, I think, is an inflection point, I feel, in India. Whoever has done a transaction digitally is not going to go back manually. So that is a big, big point. And this is not something, which is easier this customer. I think what we have achieved in these 4 months, from a digital behavioral change of customers is possibly what normally we would have done in 4 years.
Okay. So 4 months or 5 months, you have done what you could not, which would have taken 4 years. Bhargav, Anamika, Rakesh, anybody wants to add anything? Anamika, you said, just
yes,
you are addressing the consumers. You just tell them what is useful for them in terms of, interactivity with the insurers. What are the new things that are coming up one should know? Anamika.
Yes,
in terms of technology.
Yes, I would just tell all our viewers here this afternoon that, insurance companies, whether it is our company or anyone, we were actually had developed a lot of digital assets. Like you would have heard someone talking about artificial intelligence being used in motor claim settlement of smaller sizes, chatbots giving approvals, especially I think Bhargav has done that in seconds. I think they're giving approvals on hospitalization. We are settling claims. Now, what happened during this pandemic is that got nudged. It's not that we never had the assets. We had the assets, but somehow the comfort of talking to a person and not fearing any virus at that point of time, people love to come to office and they would enjoy, oh, theek hai, aaye, and I will do it, and that's what. This virus put the fear of saying, oh, I can't be contacted, I want to be far away, yet I want my claim. But sir, I want to point a difference. When Amphan struck West Bengal, we tried our level best to convince customers who are viewing today, many of them, that, please click a video, we will give you immediate payment of the losses that you have suffered. But majority did not take. They said, we want our vehicles to go back to the garages, get it repaired, you send your surveyor, whenever the trees have fallen, then they lift it. So the behavioral change will take a bit more time. The virus definitely nudged for the usage to enhance, but it is a long way to go. So the acceleration of a digital optimization has come about. But to see I don't know, according to me, it will take some more time because Amphan came soon after the COVID struck and we could not convince customers to take ready payments there. Similarly, in COVID, I'll just one small thing, because we belong much to the rural areas in tier 2, 3 cities. When officers came, our agents came rushing and many customers did. They just wanted to know whether we still existed or not. And that part of that emotional bondage to something they have purchased needed a verification by the physical existence. The city is different. People who keep using is different, but the tier 2, 3 cities still want that. The touch.
Thanks. Yeah, thanks, Anamika. I think it's the same thing. It also the banking segment talks about, particularly those in the who are in touch with SMEs and MSMEs and all in the retail segment, where the people are feel and touch. That's what you're saying. Yeah, both Rakesh and Bhargav want to add. Rakesh, yeah, go ahead. Rakesh.
So I just wanted to take the point forward. What Anamika was saying. The only point which I said that ecosystem, what Nilesh said, what Anamika said, most of us have digital assets. But now because COVID has come and people realize physical contacts are not possible, the digital ecosystems are integrating. For example, we had option of going with Aadhaar and then it got withdrawn for insurance. We don't have a formal KYC in place. Now it is coming in place. We still, as an insurance company, will offer option of collecting our premiums in cash when we all want to promote digital payments. Many of the things which required a sunset were not taking place. If you ask me, we still send physical policies of insurance policies, which is so outdated when we today have an option of connecting with people, digitally. So I think what is going to happen with this event is many of the things which we ought to be giving up, any change which you require, you also should be prepared to give up the past. If you are not willing to give that and you keep on just adding, it sometimes adds to confusion. So I would kind of presume that a lot of consumers today are confused, maybe because of their old habits also. And I would encourage the consumers to evaluate what we are all saying, that there are a lot of digital options available. We are a fair insurance company. We generally give annual products. So we will obviously come back to you for renewal. So you should trust us that we are there.
Okay, thank Bhargav. You wanted to add.
So I just wanted to add a lighter note to this. You started by saying that we are not marketing ourselves, and that's so true, because when you say that in you hear a lot more about technology in banking and not so much in insurtech. Obviously, we have not marketed ourselves well. So if you hear everything that my colleagues talked about, I think that this industry has actually built a lot of digital assets. And I'll give you a small example. As an industry, we insure two-wheelers where we charge 1,000 rupee premium at best in certain cases, right? We pay maybe 700 rupees in claims. We have to make do with 300 rupees, on which they have the operating cost, the policy servicing, policy issuance, everything else, right? Claim service cost. We still do that. And we've been able to do that only because of the technology investment that we've made, and not just, in ICICI Lombard, but the entire industry has made, at different levels, pretty heavy investment in technology. It's just that it's not known. I can't completely agree that, there are certain steps that we still need to take to make complete, transformation and complete adoption. As an industry, we don't do KYC because it's not required. But without KYC, you have a contactability issue. And at times you can't, solve that problem unless, you have the contactability to move to digital. For example, we, in this period, in the month of April, 100% of our motor claims were done using a video inspection, which is a real-time video inspection with no, human intervention. In the same Amphan that Anamika is talking about, some claims we paid or settled through drones. We just flew drones over a particular damage, and it's not just us. A couple of other companies we know have also done that. So there are a lot of technology adoption that we have done. We can do further. I genuinely believe that this has been a seminal change and is a step change in that direction. Of course, 100% people will not adopt, but a large movement has happened in terms of faster digital adoption.
Thanks, Bhargav. So you hold on. I will ask you only because you always come in the last. So last round, just tell us. We spoke about digitalization. You are saying that it's actually getting again momentum. It's all along there, but now it's getting even further momentum in better and all. But tell us, for the people who are witnessing, are viewing it, is in terms of products. Can you give us what are the newer things? I just want to know, somebody who has a general insurance, has a life insurance cover, health insurance cover, that person can do without having going for Corona coverage or something like that. I mean, is that so? So it's if somebody is insured reasonably well for the health, does not need to go for anything extra. Then extra is meant for whom? They are the new people coming into insurance segment who have never had any kind of health policies before. How does it work? What are the new things? Are you also taking care of somebody as having corona but taking care of it at home, not going to hospital because either hospital there is no space or he does not need to? How does work in the product space? Can you give a sense?
So thanks, Tamal. So on the health product space, there are two large categories. One is the benefit covers, right? These are fixed benefit, typical critical illness type of covers, or disease specific covers. Let's say a cancer policy which pays if there is an incidence of cancer. That's one type of policy which is disease specific, which obviously would not cover a new disease because it was not even factored. But the more popular and the larger product category is the indemnity cover, where we pay for we reimburse the cost of hospitalization, whatever may be the disease. Now, when I was referring to the fact that when we price those products, and that's a large component in the market. Now, when these products were priced and approved by the regulator, we couldn't have dreamt of Corona. So we did not price for this event. But we as an industry said that even if it was not considered, we will pay for all the claims when you get, go and get hospitalized, because we talked about paying for hospitalization. So that's the principle. Now, the question is, why are we launching additional COVID products? A couple of reasons. One, there is a segment of customers who've not bought an indemnity policy, and there is an opportunity to provide them some cover, because at this point in time, everyone is concerned about their health spends. Second, even someone who's got a standalone, let's say, indemnity policy with a 5 lakh sum insured, the expenses that people are incurring. And if a COVID treatment is going to consume your full sum insured, you remain completely exposed if something else happens to you. So on top of your existing product, buy a COVID specific product that will take care of a COVID event if unfortunately that happens. So those were the main reasons why these policies were launched. Most of us launched even before the regulator asked us to do, because we felt it was the right thing to do for the customers. And now the regulator has asked all the companies to do, and almost all companies have launched these products. The last point that I want to make is the point that you asked about, way the claims is being serviced and experienced. Apart from contactless, obviously on hospital, it cannot be completely contactless. So you have to go to a hospital, but people are scared. So at this point in time, quite a few of us have launched services where you can take basic treatment, including for COVID treatment, based on medical guidance at home. If, however, it becomes serious enough and critical enough, you need to go to the hospital, that's also fine. But at the first stage, early stage, when you don't need to go to hospital, you can get treatment from home. And the regulator has encouraged, as Anuj talked about. And again, some of us have launched telehealth services. If suddenly you feel uncomfortable with something and you want a doctor opinion, you don't want to go and visit a doctor, you can call up, on our app, you can call up doctors and you can get the services. I think these digital health services and non-hospital based health treatment is something that we will see more of in the future.
And that has come up because of COVID.
So telehealth we had launched even before COVID, but it was for a set of customers who were paying for that cover. We had a specific cover, outpatient treatment cover, for which we were allowing it. But during this crisis, we opened it up for all customers, even though people hadn't paid for it.
Anuj wanted to add, yeah.
Yeah, so I just want to add on to, I think, some of the aspects that Bhargav touched upon, and two, three points that I want to add on to what Bhargav mentioned.
A bit louder, Anuj.
Yes. Is this better, Taman?
Yeah.
So because again, in the interest of the consumers, traditionally, when a customer first buys a health insurance policy, first 30 days is a wait period. So a lot of insurance companies have come ahead and said, for COVID, that 30 days is 15 days, right? Again, the interest of the consumer. The second thing that traditionally we would do as insurance companies for existing policies is, every time a customer claims, there is a no claim bonus that is withdrawn from the customer or gets reduced. A lot of insurance companies have come forward and said, for COVID related claims, no claim bonus will not be withdrawn, right? The customers, so that they can enjoy the benefit that they've accrued from the past. Another trend we've seen in the market is customers who have an existing policy, but are concerned that some COVID related claims and treatment costs are going up to 10 lakhs and 15 lakhs and so on and so forth. There are much cheaper top-up plans available. That I have an existing 4 lakh sum insured, now I can buy a 6 lakh in excess of 4 lakh. It's a much less expensive, but still gives me peace of mind that I have a 10 lakh coverage. So in that sense, we've also seen more innovation come out of the industry from a product standpoint, keeping the consumer's interest in mind.
Okay, thanks. Nilesh, you wanted to add? Nilesh.
Yeah, thanks, Tamal. Couple of points I wanted to add. I think Bhargav and Anuj have spoken, about health. Our industry is also called non-life. So we pretty much insure, apart from mortality risk, we pretty much cover everything. Yeah. There are three broader comments or trends which I just wanted to make.
Sure.
One is, I think, that our industry is beginning to look beyond just a company which reimburses your bills, reimburses your claims. So what I mean by that is, what I generally called a larger slice of life. So whether it is, second opinion in terms of health, whether it is in terms of roadside assistance, in case, you are riding your motorcycle in Ladakh and you get stuck there, not only will the insurance company help in paying the damage to your motorcycle, but it will also play a role in getting you back to safety. If you are stuck in Chile, South America, and you get pickpocketed, and not only will the insurance company pay your whatever you have lost, but also help you in emergency cash. So I think this is an important point, wherein, insurance companies are expanding the products beyond, just making claim payments, to covering a part of your life. Number two comment, which I wanted to make was, I think the nature of the risk, and whether for individuals or for corporates, is moving a lot from tangible risks to intangible. What I mean by that is, earlier, whenever in terms of catastrophic risk, a factory's bulk of the claim, used to be in terms of the damage to machinery or property, physical damage to the factory. Today, 90% of the claim is because of the business interruption, because the plant was shut down and people were not able to access it, and hence there was a loss of profit. Similarly, for individuals, bulk of the trend which will start becoming going forward from physical assets, it will start becoming cyber liability. We are all seeing the risks of that. So that is a very huge line and change which will happen, moving from tangible assets to intangible assets. Third trend, and this is linking to your point on InsurTech, which is the new generation, the youngsters. I think their requirements of insurance is very different. They want, if I may use the term, sachet insurance. They don't want to buy a full bottle of shampoo. They just want a sachet when they need it, at the price point they need it. So if I have a high-end DSLR camera and I am going for a trip, I want to insure it for 2 weeks. I don't want insurance for the full year. Give me that product. Give me, I have only 10 seconds to do that insurance. Do it to me digitally and do it. So I think these are the three trends, I think, which broadly, are going to, happen, going forward. And this is also going to define the insurance industry going forward.
Thanks, Nilesh. Nilesh is from Tata AIG. So quickly, we have two more issues I want to discuss till about 5 o'clock. And then there are many, many questions, interesting questions are coming up. One critical issue, this entire health system in India is completely, I would say, unregulated and fragmented. There is no single authority, a sort of health regulator. Bhargav is smiling because I have heard you also talking on the similar point. And then we are finding is this, I would say, it's a battle between hospital and insurance companies, because the government has trying to standardize the package for COVID, which is capping the hospital charges, etc., etc. But not every hospital is listening to that. So there are different hospitals are giving different kind of billings. I have come across one hospital from West Bengal is asking for 10 lakh plus for a 15-day tentative estimate. And that's the proof there. But I've been told in certain areas, in certain hospitals, I would not name the state and the hospitals, they're not even entertaining the insurance coverage. and they are insisting on cash payment kind of thing. So that's the kind of thing, on the one hand, you have your General Insurance Council, which is sort of SROs, but the hospitals do not have anybody else. So there is no meeting point where you can actually, standardize in according what the government says. The hospitals, every hospital is supposed to standardize, and you are taking care of that. So there is a mismatch, and there is a kind of chaos, and the consumers are suffering. So who would like to take this? Bhargav?
Not a very popular position to take on this one with the hospital industry,
But
who are really our partners, because if you see, our products, why is this important? Our products are something that we sell to our customers, but the services consumed somewhere else. In the case of healthcare, health insurance, it's at the provider's place. So we have to work with the network of partners and do what is fair to both the providers as also to the customers. Now, the reason why this issue is coming up now is it's been an old issue. We've, as an industry, always wanted to have some kind of a sensible negotiation with one body in the interest of customer. Because if you think about it from the customer's perspective, typically, let's say sum insured is 4 or 5 lakhs, and if treatment for one individual member of the family for one particular incident is, let's say, goes to 6 and 8 lakhs, what happens for the rest of the year? So effectively, if you can't keep the cost under control, either the sum insured disappears for the customer, which keeps them open to risk, or secondly, in the due course, as costs go up, premiums go up, because it's a pooling of risk, right? Everyone, pays a small premium, and a few people claim, and that is how we settle the claim. So if these costs keeps going up, it hurts the consumers in the final analysis in terms of increased premium rates. So one of the things that we've been kind of having this discussion with the hospital body is that, or multiple hospital bodies, is that, you can't kill the golden goose. I mean, at the end of the day, it will come to haunt you more than anyone else. Unfortunately, there is no regulator at a national level, because this is a state subject, as we know. And that's why, some of us, we've been constantly saying that there is need for some kind of a national regulatory body which looks at hospitals across the country. Now, to do that, you'll need a center-state dialogue. This is not something that you and I sitting here can achieve. You need a center-state dialogue to put together a certain framework. And the NDHM has, in my mind, attempted that, or set the ball rolling in that direction. How well it progresses, we'll have to see. But we are very encouraged to see that step being taken.
Okay, Anuj, you are a pure play. You are a pure play health insurer, and you are not into all the car and other motor insurance and property and all. So tell me, is it also your experience? So there is there's a, I would say, conflict, fight, whatever it is, between hospitals and insurers. And how do you sort this out, Anuj?
On the face of it, what is cost for an insurance company is revenue for a hospital. Yep. So there is an inbuilt conflict. Having said that, we both are able to give the best possible service to our customers if we work well with each other as stakeholders, right? Hospitals intuitively understand that, and insurance companies, because at the end of the day, we are a financing solution. The healthcare delivery happens at the hospital level. So there is a lot of dialogue as we speak, which is on between these two set of stakeholders. Under General Insurance Council, under CII, FICCI, some of the other industry bodies, I think some of it has been very constructive, I must admit. It has helped that in certain areas, the state governments also have come in with standardized rates. There are, so the more standardization we are able to bring in, the faster is customer admission, discharge. It is more efficient for the customer, for the hospital, and better for insurance companies because there's more transparency. So in that sense, I think we have all to gain. And I'm a big believer that we have to just continue this dialogue. Government should, in my view, and intervene, and healthcare being such a sensitive and important area, that as the center and the state government figure out how to regulate, as insurance companies, we have to do that much more work with our hospitals and healthcare providers. And as Bhargav said, across multiple levels, the National Digital Health Mission, in my view, will improve the experience for the customer, will reduce fraud, will lead to more standardization, and it should improve experience for all stakeholders, most importantly, the consumer in that sense.
Can you tell us, you have all of you have all India operations. So during the COVID time, which state you are finding is most difficult to handle and which state is the easiest? Yeah.
I think we all had different experiences.
No, I would like to add regarding these hospitals.
Yeah.
See, they don't depend on insurance companies much for the revenue. Look at the penetration in health today. So I will not mention big names with whom I have been trying for the last many years for negotiating this price. They say your contribution to my revenue is X percentage. So it boils back. The more we have our young viewers today insure right now, we can get that en masse, and if that mass increases to the hospital, probably that's the inflection point where the so-called negotiation can work. Today, we are not the main revenue earner for the hospitals. Yes, we contribute, but not the main. That's one. Secondly, which state? It depends on hospital, sir. It's not the state. What we have observed in the number of claims that we have paid, certain hospitals have been reasonable, and as Bhargav had mentioned regarding this innovation of product, see, in normal product there's something called this, typically the PP kits. In some bills you'll find 67 being used in 2 days. It's abnormal, and somewhere you will find, so those things don't get covered typically in a normal policy, and that's where we, being human at this stage, we were reasonable. So it is hospital to hospital which differed. Even whether it was Assam or whether it was Cochin, there is no graph which said the state is difficult.
Okay. Anybody wants to add anything? Others, you can jump onto that. I know. Yeah, Rakesh.
I will just add a couple of things. I think health and health insurance is now a social product. We now need to see, with an event, maybe like this thing, it is no longer just like a typical insurance product which we do. So there has to be a complete shift of mindset. And I think even hospitals are coming under pressure to also come to a realistic way of dealing with the cost of hospitalization. I think more organized funding which comes from insurance to hospitals, it is good for them in the long run. And it is important for government to lay down the guidelines now properly. Without this, there is going to be anarchy, and insurance companies, which generally gives a 3-year price stability for their product. Today, when an insurance company files a product, the regulator specifies you will not be able to change premium for 3 years. For many of the companies, if COVID type of event keeps on taking place again and again, if there is a renewed surge, nobody can afford this. There will only be a choice of 0-1, whether you want to do it or you don't want to do it. And just to exemplify a point in terms of impact on insurance companies, because there are different forums which say insurance companies can pay even if a customers. I must only tell you that the insurance claims have doubled in the last 30 days. I can give you some statistics, which is with GI company, that as we had 81,000 claims at the end of 31st July. And on 25th August, it is 1,48,000 claims. Almost from 1,000 crores, we have jumped in 3 weeks to 2,000 crores. And India is still one of the fast growing. We are doubling every 31 days. So this 2,000 crores in 31 days, if you see them, this thing should become 4,000 crores. And from 4, it can be anything. If you really see, you can't expect ordinary consumers to keep on paying this money. And we need to have an organized approach. It is everybody's problem now. Hence, it is a social product, and we all need to put our heads together quickly. This is no longer a 5-year discussion debate anymore.
Thanks, Rakesh. Very valuable input. The last round, very brief round, we'll end it in the next 5-6 minutes. Then we'll take questions and all. Now, I wish we had a life insurance person here and all. So there's always a conflict, and now it's more pronounced between life and non-life insurers when it comes to health insurance, because in some form both of you actually offer that, either it's in terms of whether it's indemnity or the benefit thing and all. So you go for the short term up to 3 years, and the life insurance companies go to 5 years and beyond. And then there's a gray area between 3 and 5 years, 3 and 4. I said between 3 and 5 years and all. So I understand that the life insurance company also wants to get into the short term where they can offer this thing, but you people feel that this is an infringement into your private domain and all. And IRDA has already constituted a committee to look into it and all. So what exactly is happening? This is there any life and health? There's a synergy. One day we'll say that you also start offering life insurances, or life insurance guy will be hugely into health insurance. What's happening? Is it a structural shift? Exactly what is happening? Can you tell us? Bhargav?
Yeah, so let me take it.
Because all of them are keeping quiet. They are just smiling. I think they want you to. Yeah?
No, I'm not so sure about that, but anyway, let me try to answer your question. So, look, this is, an unnecessary debate that has started, because back in 2015, there was a committee that was formed and which looked at this issue. And they looked at a possibility of a level playing field for everyone to do everything. And finally, the analysis was that the amount of changes that has to be brought about to allow level playing field. When I say level playing field, in life, you can bundle savings with protection. That is what you see as ULIP, right? In our industry, we can't build savings as of now. I mean, you can be allowed to. It's not as if we cannot be, but that is not allowed. That is not allowed today. To bring about these level playing field issues, it was probably too complicated, and the regulator, in their wisdom, kind of separate the two segments. Now, the argument the life companies have is that they have large distribution and they can increase the penetration, reduce the penetration gap. If you look at pure life penetration in the last 10 years, from 2009 to 2019, it has dropped from 4.1% to 2.6%.
Yes.
While non-life penetration has increased in this period. So, and in health, under the GI companies and the SAHI companies, has grown at more than 25% compounded. So, the life industry needs to focus on improving or reducing the penetration gap that is increasing as we speak in the life side, rather than focus on something else where we believe the GI companies are anyway doing a good job.
Anybody wants to add?
The only thing,
yeah, Nilesh, carry on. Yeah.
The only thing I would make a comment is, I don't really think in a country like India, at the stage where we are, we need to be worried about cannibalization or conflict, etc. I think, if one looks at savings plus protection for life and, the way non-life is defined in India, I think there is so much under penetration, that there is adequate room for growth for both the industries for not just one decade, but the next 2 or 3 decades. So I think, which is, very unique, because, if one looks at, some of the percentage of GDP penetrations of India, or, insurance, per capita insurance, the levels of India are still very absurdly low, vis-a-vis any, forget developed country, even a developing economy comparable in the world. So, which is where I feel, this this entire debate is little, I think it's premature. I think there is enough room for growth for both. I don't think, really the way to grow right now, it's like GI industry, right? Everybody can grow. There is, if the industry has potential to grow at 20%, health insurance is growing at 25%. So everybody can grow. You don't need to grow at the cost of the other. That's my only point.
Okay. Yeah. Rakesh, you wanted to jump?
No, I just wanted to add, and I agree with what Nilesh and Bhargav were mentioning. I think the real debate should be in terms of, the distributor being able to distribute multiple products. It is not about insurance companies carrying the risk behind. And that is not the big objective, because everybody puts in capital, and many of the places you have both life, non-life companies, you may have common shareholders also. So structurally, the distributors today are also permitted to sell. A life insurance agent can also become a non-life insurance agent and can sell a health insurance. Nothing stops them. The real thing is killing the front end and really making them sell through. If you ask me today, not even 10% of the agents in this country are selling health insurance but are selling other insurance products.
Okay,
and that is where companies need to concentrate.
Okay, thanks. I just want one line answer, and before I get into this and all, and my provocation is, Rakesh, Reliance General, you said that the last 1 month the claims have doubled. and the way COVID cases are going up, you said it will be even double. Then can you give us a sense, what will be your balance sheet, each of you, for the fiscal year 2000, current financial year, which ends in March 2021? I know you can't say specifically because some of you are listed, Bhargav, you are listed and all, but tell us a little bit industry in terms of profitability, where it will be. I mean, it will be deep red. Rakesh, starting with you.
No, so I think it's a very critical question, and we all are perhaps looking at an early end for COVID. And I must say that this event, whatever it has happened, if it doesn't end quickly, it compounds the problem. It is not that the problem is extrapolated like a straight line, it is an incline. So the important point is the closure. The second thing is, but insurance companies are strong because most of the insurance companies have a solvency margin of 50% over their liabilities. So it is not like that the companies would go down because the assets which an insurance company by law are required to keep is 50% more than the liability. So there is enough which companies have, but certainly nobody planned for this kind of an event.
Anamika, quick 30 seconds.
The impact of COVID claims will get compensated by the lower motor claims that is coming in. So it will be balanced out in either way. So we wouldn't see much of a dent in the balance sheet as it would have been.
Anuj, you are a pure play health insurer. Your take, Anuj?
Kamal, this is a business risk. One has to look at it over multiple years. One can't. One is not building a short-term business.
Okay.
My view is similar. We are in the business of insurance. Yes, no one could have predicted this, but it has happened. We have to take it in a stride and serve our customers.
Nilesh?
So agree with Anamika that lower motor claims will offset this thing, COVID claims. But the only other point which I would make is the number of catastrophic events in India, including the pandemic, has been significantly increased, and that is making the entire P&L balance sheet very volatile.
Okay. I wish we could have gone on and on and on, because the very interesting thing from the consumer's point of view, as we started, we are not addressing the investors and others, the structural issues, the regulators, it's particularly the consumers. So a lot of things you have said that people are appreciating the risk, people are coming forward, it's no more a push product, it's becoming a pull product. At the same time, things are pretty bad, and you are hoping and praying that things will get better, where you are getting a bigger sense of technology. And at the end of the day, as you said, COVID is actually giving a big booster to the people's awareness of insurance. That's the biggest takeaway. Even though there is short-term pain, but you guys are strong enough to withstand with newer products and processes to overcome this problem and becoming bigger. Anyway, general insurance pie is getting bigger, penetration is getting bigger. So a few questions we'll take. First question to Anuj, you already answered, but still there's a question. Are standalone health insurance financially sustainable, particularly in the context of COVID? Do they need to see a wider business perspective?
Tamal, in my view, in the times to come, heightened awareness means more growth. This is a business risk, and we have to look at it on a multi-year basis. At this stage, the focus is only to service the customers. I don't see a worry there.
Okay. So at this stage, not the bottom line, it's the customers, that's the more important thing. Service. Yeah, fine. Second question, not many companies are making underwriting profits. They're all, they are all making profit through investment income. When will things change? Who will take the question? Yeah, Rakesh.
I think investment incomes are also coming down, to be fair. The yields, if you really see, have, come down by 100, 150 bips. Automatically, for insurance companies, it leads down to improvement in pricing. Many of the underwriting loss is also because of the investments which we are doing in growing our business, because general insurance is still a high growth market and we require to make some of these things. But I think overall, if you ask me, the industry is moving towards improving its underwriting results if it follows a defined business plan.
Okay.
I would just want to add one more thing. We follow a ranking. Just to add one more suggestion, we follow a ranking based on GWP. Maybe we should follow a ranking based on profitability. Then the behavior will change.
Okay. Okay. Anamika, you wanted to add?
I will welcome the viewers. Keep adding to our kitty and you'll find underwriting profit very soon. We need a big penetration to make money. So right now we are making money on float management, but I don't think it's a bad thing. I don't know why people are so worried about it.
Okay. Nilesh wanted to add. Nilesh wanted to add. Yeah.
There is also a structural problem in the industry, of having a very long tail of players with suboptimal market share of less than 1%. And certain segments in our industry are very commoditized, where customer has not been very discerning. So, and we have seen now in the last 2-3 years, there has been a lot of M&A, merger and acquisition activity happening in the industry. So I think some amount of this consolidation is also going to be very healthy, both for customers as well as, for the profitability of the industry. So this is a good trend going forward.
I just would like to one addition.
Yeah. Anamika.
We have been actually pricing our risk primarily on the asset and not the customer per se. So as slowly if we move more in merging the two, industry will start reaping a lot of underwriting profits.
Okay, there's an interesting question. During this kind of COVID pandemic time, where is this? Are you seeing many newer products are in the sandbox, regulatory sandbox? Like, are you guys approaching the regulator with newer ideas? Can you give us a sense?
The answer is yes. Lots of new products have been approved under the sandbox for both for motor and health. Each one of us have, 5 to 10 products that has been approved.
Nilesh, you wanted to add?
Yeah.
Nilesh.
So just to add to what Bhargav said, the regulator has just opened a new window as well for insurance companies to submit a new set of products. So I think this is a very, very good trend, and we should have maybe discussed it earlier, but this entire sandbox concept, wherein you experiment with a new idea, a new technology, a new thought process, new customer segment, is extremely good from the regulator perspective and very, very dynamic. And I think, this will really help our industry grow, immensely.
There's a question, I don't know. Is it why there are many actually, I'm just picking up some of them. Then when it comes to distribution, why are the distributors resist? They're not very excited about health products, while they are pretty excited about life insurance products. Do you also experience the same? No?
I don't think so.
Not really.
I don't think that's a correct observation. In fact, on the other hand, health insurance, is becoming one of the most exciting line for distribution, wherein because, the customers, as I said, because of their better awareness, are not looking at a 1-year health insurance, but are looking at insurance for 5 years, 15 years, 25 years. And so for the distributor also, this becomes a very long income stream, because if the distributor keeps on servicing the customers over regular basis in a good way, proactive way, so then, this becomes a, good annuity income stream, for the distributor. So I do not agree with this statement.
Thanks. There's a very interesting question. I think all of you would like to know, how do you price a risk like COVID? Is it like is it my age? Is it my gender? Is it my location? Is it my work profile? What are the contributing factors for the risks? Bhargav?
So there is no data, right? So we use past data to price a risk. COVID has come out of nowhere. So we had no data to price COVID. And that's the point that we were making earlier, that all our products were priced without factoring the COVID risk that we are kind of paying for.
It's a blind call.
We were one of the first companies which came out with a COVID product way back in March end. Yeah. And the struggle was we had very limited data and we did not understand the impact of the extent of COVID and the time frame. So with existing data only we extrapolated, but I must also say we were also proven wrong. Since health is an all risk cover, we still cover the consumers without having charged them. So COVID type of an event, frankly speaking, are balance sheet events. These are not risk events, and which is why strong insurance companies will always have a reserve for doing such businesses, which is why large companies will always lead the way in terms of innovating some of these in the tough environments. And that is what is also getting established. You will not see necessarily everybody coming and launching COVID products, even though the calamity was a global calamity, not even national.
So Rakesh, can you just tell us a little more? Is it left it to your discretion, or the regulator wants each of you to come with the product? And when it comes to pricing, are you being told that what will be the range of price, or is it up to your board?
No, I must compliment IRDA for a
Yeah,
very
Rakesh. Rakesh.
Yeah, so I must compliment IRDA that they never forced us to initially to come out with any product. They only encouraged us to look at a calamity and come out with an appropriate product. The pricing was very discretionary, and that is evident between the 5-7 companies which came in the market came at varied price points. Of course, looking at the enormity, regulator also came back later on to say, why don't we standardize so that it reduces the confusion for a consumer who really approaches that. But pricing is still determined by every company the way they see the experience. So I think pricing freedom continues in India. Products are getting together because the way the architecture, understanding, awareness is catching up, there might be a need for us to really keep that in a standardized format.
Anuj, you wanted to add?
So just to one more aspect, I think the regulator again has been extremely proactive, knowing that we didn't have past data to price. Typically for traditional products, they say 3 years experience, only then you can revise pricing. In this case, they've said as often as you believe necessary. So once again, basis experience of even 2 months, if we wanted to go back and change pricing, the regulator has shown openness to that. So I think it's again giving us confidence to move ahead.
Thanks. We have only few minutes left. So this is a hypothesis. I mean, this question is, Bhargav, can you come up with a product which is basically to protect me from a lockdown? So I am actually operating a shop in a particular area, and tomorrow my state government or the local authority says that, look, you can't open a shop, or you can't keep the shop open for 5 days a week, like in certain states are happening. That's specific and all. Is there any product developed by any of you for this kind of problems?
So, the principle of insurance is a risk pooling mechanism where thousands of people pay a small premium and very few people end up claiming amount to those people. So 1,000 people pay for 100 rupees and you create a pool of 1 lakh, maybe 3 people will consume 30,000 each. That is the principle of insurance, right? It's a risk pooling mechanism. Moment you have a situation where everyone will consume it, it is not insurable. Which is why pandemic globally is considered to be not an insurable risk, because everyone will fall sick at a point in time. A lockdown happens, everyone will be locked down.
Okay. Last, Nilesh, you wanted to add something? Nilesh, you wanted to add? If it's specific, otherwise you can give it a pass.
No, I'll give it a pass.
Okay. Last question is this interesting question. When do we see simpler, de-jargonized insurance papers? The statement. Anybody?
We thought.
Keep hoping. Keep hoping will soon come.
Anamika? No.
I would recommend to whoever has asked us, keep praying for us, and we'll definitely come with very simple products very soon. But do insure. That is my only plea to you.
That person is not asking about the complicated product. It's the jargon, the way you write your insurance form and all. It's too complicated.
The sandbox also allows you to come up with small, simple products, easy to understand, not using words like arbitration, this word, that word. Simple products, yes, sir. Time has come.
I think a lot of insurance companies are trying.
Yeah, Rakesh is adding. Yeah.
Yeah. So I just wanted to say that a lot of insurance companies, as they are going digital, they are also taking the effort of putting it in the way a common man and a reasonably digital literate person can understand. So, it is I would only encourage people to come and now see and read for themselves and keep on giving the feedbacks where they are there. The tough part in India is we deal with all different customer profiles, different literacy, different age bands, different languages. And sometimes that is the complexity which we are actually handling more than the insurance jargon.
Thanks, Rakesh. But that is why all the more you should be even simpler.
Yes.
Okay. No, thank you, Bhargav of ICICI Lombard, Anamika from IFCO Tokyo, Rakesh, Reliance, Nilesh, Tata AIG, and Anuj from Religare Health Insurance. Thank you. We could have gone on and on. As I said, our primarily we are catering to the need of the consumer, who not the investors and policymakers. So we wanted to de-jargonize and wanted to understand what is happening in your world. I think the key takeaways are it's a tough time. As you rightly said that claims are going up, so bottom line is under attack. But you are saying that you are solvent enough, you can manage, and you are also seeing this as an opportunity because there is a risk awareness about insurance has gone up, and more people are coming, newer products are being created, and of course bigger and wider use of technology. So yes, it's a tough, challenging time, but every challenge has an opportunities, and you are grabbing those opportunities with both hands. Thank you. Thank you. We will just start the life insurance discussion in a couple of minutes. Thank you, a lady and 4 gentlemen.
Thank you
for being with us. Hope you two also enjoy it.
Yes.
Thank you, Tamal. Thank you for having
Thank you,
us.
Tamal.
Thanks a lot. We're logging off now.
Yeah. Thank you. Yes.
Thank you.
He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming a brand. Business Standard.
Papa, yoga time.
आज बच्चे भी इम्यूनिटी स्पेशलिस्ट बन गए हैं, विटामिन ABCD के एक्सपर्ट्स बन गए हैं।
Papa, done.
क्योंकि ये सब जानते हैं कि जब हेल्थ की इम्यूनिटी बढ़ती है तो हम सुरक्षित रहते हैं। इसी तरह हमारी फाइनेंशियल इम्यूनिटी यानी फाइनेंशियल सुरक्षा बढ़ने से हमारे अपने सुरक्षित रहते हैं।
SBI लाइफ का पूर्ण सुरक्षा प्लान जो दे लाइफ कवर और 36 क्रिटिकल इलनेस की सुरक्षा और बनाए रखे बैलेंस बढ़ती उम्र के साथ।
इन दिनों ने हमें समझाया है कि मुश्किलें कभी बता के नहीं आती, और जब बात हो अपनों की, प्रोटेक्शन जरूरी है सबके लिए। HDFC लाइफ के टर्म प्लान्स विद 1 day क्लेम सेटलमेंट अपनों का फ्यूचर आज प्रोटेक्ट करें। HDFC लाइफ, सर उठा के जियो।
He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming a brand. Business Standard.
Papa, yoga time.
आज बच्चे भी इम्यूनिटी स्पेशलिस्ट बन गए हैं, विटामिन ABCD के एक्सपर्ट्स बन गए हैं।
Papa, done.
क्योंकि ये सब जानते हैं कि जब हेल्थ की इम्यूनिटी बढ़ती है तो हम सुरक्षित रहते हैं। इसी तरह हमारी फाइनेंशियल इम्यूनिटी यानी फाइनेंशियल सुरक्षा बढ़ने से हमारे अपने सुरक्षित रहते हैं।
SBI लाइफ का पूर्ण सुरक्षा प्लान जो दे लाइफ कवर और 36 क्रिटिकल इलनेस की सुरक्षा और बनाए रखे बैलेंस बढ़ती उम्र के साथ।
इन दिनों ने हमें समझाया है कि मुश्किलें कभी बता के नहीं आती, और जब बात हो अपनों की, प्रोटेक्शन जरूरी है सबके लिए। HDFC लाइफ के टर्म प्लान्स विद 1 day क्लेम सेटलमेंट अपनों का फ्यूचर आज प्रोटेक्ट करें। HDFC लाइफ, सर उठा के जियो।
He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming a brand. Business Standard.
Papa, yoga time.
आज बच्चे भी इम्यूनिटी स्पेशलिस्ट बन गए, विटामिन एबीसीडी के एक्सपर्ट्स बन गए।
Papa, done.
क्योंकि ये सब जानते हैं कि जब हेल्थ की इम्यूनिटी बढ़ती है तो हम सुरक्षित रहते हैं। इसी तरह हमारी फाइनेंशियल इम्यूनिटी यानी फाइनेंशियल सुरक्षा बढ़ने से हमारे अपने सुरक्षित रहते हैं।
SBI लाइफ का पूर्ण सुरक्षा प्लान जो दे लाइफ कवर और 36 क्रिटिकल इलनेस की सुरक्षा और बनाए रखे बैलेंस बढ़ती उम्र के साथ।
इन दिनों ने हमें समझाया है कि मुश्किलें कभी बता के नहीं आती, और जब बात हो अपनों की, प्रोटेक्शन जरूरी है सबके लिए। HDFC लाइफ के टर्म प्लान्स विद 1 डे क्लेम सेटलमेंट अपनों का फ्यूचर आज प्रोटेक्ट करें। HDFC लाइफ, सर उठा के जियो।
He's making his investments talk. Business Standard.
Hi everyone, welcome back, and over to Tamal again for the session on life insurance.
Hello and welcome to the session on life insurance, the second session of the day. Good evening, good morning, good afternoon, depending on which geography you are in. I'm talking to the audience. So we have the biggest entities and the finest minds. We have Sushil Kumar from MD from LIC, which is in the news, the big elephant in the room. Okay, for news for, of course, it's impending IPO. We'll talk, even though primarily this today's program is looking at the consumers, but still, since LIC is there, we need to discuss that. Then we have Biva from HDFC Life, we have Mahesh Kumar from SBI Life, we have ICICI Pru's Mr. Kannan, we have Bajaj Alliance's Tarun Chuk, and last but not the least, we have Policy Bazaar's Yashish Dahiya. Again, Ashish, you will hear a lot of interesting things because the social distancing time, more focus on technology, and you have a unique platform. So let's start. We have a short, brief rounds, probably an hour or so, and then we'll take questions. Thousands of people are watching, listening, viewing you and all. So tell us, as we understand that, forget COVID, even before COVID, the life insurance penetration was not going up in contrast to non-life insurance in India. It was sometime it was stagnating, then it was going up a little bit, but the past few years it's actually going down. And during COVID time, we understand that business is not that good. Yes, in terms of numbers, it's going up, but in terms of actually business volume, no, it's not going up. Ticket size is not big. Of course, I have read a recent LIC news where it said a massive 40% growth in individual premiums during July and August. LIC that happened, but that's probably an exception. Overall, ticket size is big, volume is going down, even though there are more people. But the view is COVID is a sort of defining moment for the life insurance industry in India, which has been stagnating or even going down in terms of as a percentage of GDP, if you look at it. Of course, now we can't talk about GDP because that's growth is not happening, it's the other way. But it will be the moment actually from now on, it will go up. It's something what happened in Hong Kong post-SARS. So we'll start your preliminary remarks that do you see actually it's an inflection point? Insurance will no more remain a push product. It will be a pull product. People will be coming. Their risk awareness is growing, and actually this is a platform to take off. Why not? We'll start with whom, Mr. Kannan? ICICI Pru boss, why don't you give us your views?
Hi, Tamal. Good morning to you. Good evening to you. Good afternoon, depending on wherever you are, the audience. I thought I will just put things what Tamal said just now in perspective. Tamal, first you talked about the penetration itself. I look at penetration a little differently from what you mentioned. You talked about the penetration in the form of premiums, but I think the correct barometer will be to look at the penetration as a percentage of sum assured. So if I look at that number, it's about 80% of our GDP. But sum assured is ultimately the amount we pay out in case there is a death in the customer, death of the customer, what we pay out to the family. That I think is a more appropriate metric rather than looking at the savings component of insurance and that going and disturbing the penetration numbers. So that is from the 60s, it has gone to 80s. Not to say that penetration is very good. There is still long way to go in terms of either the number of people to be covered and the amount of insurance. Both there is a long way to go. You talked about the COVID and the COVID related situation. The second point I want to make is that in any industry, including services, if you look at a year on year, then obviously there will be a little bit of disappointment because you're looking at the base month, which is a fantastic month last year, which was much, much before this pandemic. However, we take a lot of heart from the fact that there's been a good sequential momentum starting from April to May, May to June, June to July. We have seen a good sort of sequential momentum. And more importantly, when several businesses are looking at their balance sheet, looking at their cash flows, I would venture to say that this is one of the very few industries which does not have any liquidity issue, solvency issue, ALM issue, or a non-performing asset issue. And we are paying out claims on time without having any difficulty. So I think it's a resilient industry, partly thanks to the way the regulators have prescribed the regulations, partly because of the way we have operated over a period of time. So I think this is one of the industries which is relatively untouched in terms of a business model and resilience. Last point I make before I hand it back to you. You talked about whether it is a defining moment. I do believe, yes, it is defining moment for two reasons. The first reason is that any pandemic like this, you talked about the Hong Kong experience, any pandemic like this immediately increases the awareness and the need to buy for term insurance and health insurance. That is what we have seen. That's what we have looked at the macro customer behavior also. If you see, be it the search engines, Yashish can talk more about it. We do see a lot of interest. And this, I believe, will be a defining moment when it comes to taking off of protection, which is even more underpenetrated than savings insurance. And the second point I want to say is that this is also a defining moment in terms of further acceleration to digital. So I believe that be it customers, be it the companies, be it the distributors, they will want to be aided by more and more digital tools to do business in this environment, be it convenience for the customer or cost for companies. Either way, it is going to be a defining moment as well. That is what I believe is going to be resulting out of this pandemic if you look at our own business models in life insurance. Thank you, Tamal.
Thanks, Kanan. It's a very, very reassuring statement. You are saying that things are getting better. April was better than March. May was better than April. June was better than May, so on and so forth. And you are saying this is one of the most resilient industry. Thank you for that perspective and very reassuring. So let's hear Mr. Mahesh Kumar Sharma from SBI Life. Mahesh, sir. We start with the general remarks and then we'll get into specific. Yes, sir.
Good evening. So basically, a lot of points I actually agree with Mr. Kannan, about the industry, how it is performed during this period. And we have to remember that last year, this whole problem started around March. And we lost almost half of March towards the end, all the lockdown started on the 24th technically, I think, but before that also, ever since the pandemic started, so we have been having this. We lost a lot of that business, and like Mr. Kannan said correctly, that last year this time was a very robust time for the business, so we can't really compare the last year's figures. But having said that, our figures for July look very much like July 19, and our figures for August we are hoping will look like August 19 again. So apart from April and a half of May, I think we've come up remarkably well. considering that nobody had thought of this kind of a problem. There have been pandemics in the past, but we have not seen anything that disrupts all the business, everything, the whole life across the world like this. So it's a totally different situation, and we have coped very well. Not only that, because the person-to-person contacts were almost non-existent, we had to adapt to a digital way of doing things very, very quickly. So, what we were doing from 2017, we were developing, the things, digital tools, etc. But within a month, we had to put everything together and have a seamless end-to-end digital solution. And we have been able to do that. I believe we are now today capable from onboarding to claim settlement to do it all digitally. So, that has been a very great journey for us. And if you look at business going forward, well, you cannot predict how it is going to be. But I can say that, if July, August is an indication, we should be doing pretty well.
Thanks, Sharma Saab. So both Kannan and Sharma, I think we both of you are on the same page. Things are getting better and better, and you are resilient. You are strong. You are not scared of COVID. It's business as usual. But both Kannan and you mentioned one thing is the digitalization. So let's hear Policy Bazaar. Yashish, you are the right person. So give us all the technology we'll discuss later also at the micro level. But you tell us how the landscape has changed or is changing because of the pandemic.
Sir, my belief has always been exactly as Kannan sir mentioned, that we have to measure sum assured, not just premium, at least as an equal parameter. If I look over the last 10 years, we have doubled our sum assured as a percentage of GDP. So the industry is clearly headed in the right direction, which means we are covering more customers. It is very heartening. India is one of the few countries in the world where, if you look at online research, there is a very high level of research for products like life insurance, health insurance, term insurance, the protection category. You'd be very surprised. This is perhaps the only country in the world, out of the large countries that I know of, from all the data, where the number of requests for term insurance and health insurance is actually about 1.5 to 2 times the number of requests for car insurance. That does not exist. If you look at Europe or US, it's largely car insurance research. But the amount of research that customers are doing for protection, this is extremely heartening. That means the customer is willing to engage, he's taking more sum assured, and the industry has a very, very important role to play increasingly. If you look at specifically those categories, protection, they have also grown dramatically while the COVID has been going on. They have been growing very fast for almost everyone. If the data does not come out as well in the life insurance industry, but if you look at the health insurance industry data, 60-70% year-on-year growth is happening. And the same is happening in term insurance. And of course, digital is becoming a larger and larger percentage of that business. So in health insurance has become about 15 to 20% of the business. It is almost half of the term insurance business. So I think digital is playing a very vital role in the growth of sum assured in the country. A lot of our processes are still evolving, sir. And that is because we are still a young industry from a digital perspective. We are a 5-year-old industry. And we are still learning how to onboard customers, how to manage documents, how to manage medicals. There will be a time when, so the health insurance industry, for example, has learned that there is almost no advantage to doing a physical medical. A conversation with a doctor with old documents is as good as doing a physical medical, if not better, actually better. And I think in the life insurance industry also, about 20% more of the cases are going through without physical medical than were going through pre-COVID. So I think that whole documentation, so issuance has been a challenge, but the demand is not a challenge. The demand has grown dramatically. but issuance is challenged. No doubt about it. It's largely challenged because of the physical medicals. At this time, no customer wants to go to a hospital to get a, if my child is slightly sick, I don't want to take him to hospital. I would rather please get well on your own, because if you go to the hospital, chances of you catching some disease are much higher. So, and neither are the health workers willing to go to somebody's house to conduct a medical. So we have also got that kind of a problem, right? So the problem is on both ends. So I think that is becoming a choke point, which needs to be solved through technology. And I think everybody is working towards making that happen. But I think other than that, uh, from a demand perspective and from a growth perspective, I think the industry is doing quite well. Yes, there is a savings element, which is a very large element, and that builds the infrastructure of the country, and that has to also grow. But from where I look at it, I don't see that as important as the protection side.
Thanks, Yashish. Happy to hear all of you are saying the same thing. That sort of there is nothing to be worried about, and actually it's a COVID. It's a COVID or no COVID. It's a normal time for you. COVID has only changes certain form and structure in terms
So I
of
think
digital, etc.
COVID has increased the demand, but it
So
has
it's,
taken away the ability to pay. There is no doubt about it. We are hearing a lot more conversation from the customer around affordability, and hence monthly pay mechanisms, etc., are becoming far more important. And especially the weaker, let me say, the self-employed section of the country is very poorly hit. They are really struggling at this stage, no doubt there. So as we as an industry really need to think about what all we can do in that, because they usually do not have very good documentation of income. They that part of the world is struggling. There's no doubt about it.
Okay, let's hear Tarun. How's the new landscape? How does it look like? Or am I exaggerating? There's no new landscape. Is the old landscape continuing?
See, of course, there is an impact of COVID, and to say that there is no impact of COVID is possibly not right. I think coming fourth on a panel which kind of is agreeing, there's not much you can add as value. But let me just try to think of it a little differently and present it differently. See, given the fact that India was on a lockdown, the base of 100 should be adjusted to a lot lower. And if you look at manufacturing and look at everybody else, where capacity was down for supply and demand reasons, we've had a similar period in the initial parts of the quarter. So I would actually say 100 should be looked at 80, and then you look at 80 and how you're doing on that. We, of course, after the COVID, and having looked at the way China, Kanan talked about Hong Kong, how does the demand for its products go up? It does go up. That's a fact. It's really showing up there. But then, so demand, we don't really have much of a problem. Let me just say it in terms of number of customers willing to talk about the conversations we're having around it. You heard statements from Yashish on that as well. But I think on the supply side, like the rest of the sector, where the value chain was hit because of migration, immigrants, and so on and so forth. In our case, there are 2-3 holy grails of life insurance. One is, it always had to be done face to face. That suddenly became a supply constraint, a bottleneck. You require to complete a sale, as Yashish said, a medical. And nobody wants to go to a hospital, otherwise it's counterproductive. You can go and catch the damn disease instead of getting rid of it thanks to risk. So despite that, I'm very happy to say that, and if I particularly look at the private data, the private insurance, I have that data with me currently, is that we had a minus 34% in terms of number of customers buying insurance in the month of April. And that has been getting better and better and better. And in July, we've been a minus 3%. And within that, there are some cohorts of companies who, for various reasons, have been a little better in terms of number of customers coming in. The issue, Tamal, has been on the purchasing power. So what has got hit in the private sector? Although, albeit I must say, life in LIC has shown a different trend in July, that the ticket size, how much are you willing to commit to your long-term goals is an issue, because Indian customer is facing a problem of should he invest or should he keep cash in pocket. So of course they've been keeping relatively more cash per customer. So therefore the cash available for investments for long term has come down, but the number of customers has gone up, or is looking a lot encouraging. I think that's a very healthy trend. Within that, if I take some micro markets, and I think the point on sum assured is very well taken. So on the term side, you are right. We have now, instead of become a very hard push product, which is what we've always kind of been worried about. We've become a little of a slightly nudge product. I think that's a huge COVID moment for life insurance, and I think we should acknowledge that. The other bit on the supply side, on face-to-face, I think already we've talked about the way everybody came alive on technology, and I think the whole world has been surprised. We've personally been surprised the way our advisors, our partners, our own people, we ourselves have really come together and handled digital interfaces. I mean, the fact that you're having this and you've got so many people who are watching us today is a clear indication the world has changed. So that is a little bit there as well. A little bit more about micro markets. If I divide India into salaried and self-employed, I think the bigger pressure is on the self-employed today, and which is where we are seeing that bit of customer interest has taken a hit. We've been checking our data. We were primarily a non-salaried company, given our own brand and the way we work. That may not be the case with others, but now we're seeing that the salaried customer proportion is getting better. So this micro market play is something that is important to notice as well.
Okay, thanks, Tarun. Yeah, thanks, Tarun. These are all. We'll get into the micro issues later. This is the first round. So you said being called the fourth person is talking different is very difficult. So now between Biva and LIC, Mr. Kumar, who do I choose? Mr. Kumar, so let the lady have the last word. Mr. Kumar, your turn. We'll talk about the micro issues later, but essentially we have gone through your July numbers, which is a phenomenal increase that you've gone to public and said that. But overall, in the industrial scenario, how COVID has changed the landscape, or if at all it has changed, you can tell us.
It has changed quite a bit. As Mr. Tarun was telling, if I'm the fifth to speak, mostly my job is to agree with all the earlier points. Yes,
feel free to disagree, sir.
One or two, yes. It's a defining moment. The insurance awareness has really gone up. Let me slightly deviate from the new business point of view to the persistency part of it. As Mr. Tarun was telling, going to hospital, that's a serious issue for medicals. Second, face-to-face physical restrictions, I think that is creating a hurdle. If I look at my renewal premium and especially the first year renewal premium, there's a fairly good growth. We are almost, as said yesterday, we are at 1.5 months ahead as far as first year renewal premium is concerned. And renewal premium also is fairly going strong. I think when there is an uncertainty, and people will definitely ensure that they try their best to see that whatever insurance they have taken, it is kept in force and the valuable life cover is kept intact. I think if that is a symptom, definitely from now onwards, the new business insurance part will also really pick up. Yes, April was bad for everyone. May was slightly better. June was much better. July was really better for us, and August is continuing to be good. One thing slightly different, perhaps, I don't know what's happening in LIC, is when there is an uncertainty, people also tend to spend or tend to invest a good amount of money on annuities. So our annuity business is really picking up, and that's giving us good volumes as far as premium is concerned. Coming to digital, yes, definitely there is tremendous scope for digital. We never thought in early March, even though we were thinking that we should plan something for work from home or work from anywhere, but the speed with which we have picked up this WFH and doing almost everything from anywhere from the homes, I think is something that's a tremendous transformation which has happened in LIC. And one more data on digital, we have done about 15 crore renewal premium transactions as at the end of 15th of August. And I'm really happy to inform you that out of that 10 crore transactions, roughly has come from outside the office, and about 7 crore is purely digital transactions, which is about 50% jump over last year. So digital is here to stay, and insurance is here to stay.
Thanks, Mr. Kumar. So all of you are on the same page that things are getting better. This August is almost a normal month, and there's more and more business. Viva, you have the last word on the general round on the changing landscape. If
Women always have the last word, Tamalda.
Yes.
Yeah, so I think all my colleagues, I completely agree with them. See, all of us, I think, see the glass half full rather than empty. Yes, there's a pandemic, nothing we can do about it. Yes, there is a lot of pain in the system. Yes, we've had to reinvent ourselves, but so has every other business in India. So how do we look at this? We've been talking as an industry as to versus China and versus some of the other markets. Why doesn't the average Indian realize how woefully underinsured he is? And so on. When you look at inflation and the fact that Indians are living longer, easily you'll outlive your retirement age by 15, 20 years. So this is that moment. And if we waste a good pandemic, then we have only ourselves to blame. I say that in a constructive sense, and that's why I think really not losing this. It'll be a shame if people move on once COVID is under control and there's a vaccine and so on. So I hope this behavior pattern that all my colleagues talked about is here to stay. I am hopeful, especially I'm very hopeful with younger population. The reason being, India was shining. You had a good qualification. There was really no stopping a young person. A young person was buying a property which his father or grandfather could not have dreamt of. He's living the life they could not have dreamt of. So now there's a kind of a very, very rude shock. And at least for the next few decades, he will remember this. And he will remember this so badly that he could lose his job, he could lose his life, loved ones, and so on. And so young people will no longer start seeing this as an expense. They'll see this as an investment. They'll see this as a necessity. And the realization that this doesn't cost a lot. When you look at what they would spend in a couple of weekends in a multiplex before COVID, that's all that it costs to get a 1 crore cover. So that's that moment. Second part is the non-salaried. The non-salaried also given, when you look at the pain in MSMEs, I think there also the realization is fairly stark about how do I transfer risk to an insurance company. Having said that, somebody mentioned about the worst is not over in terms of COVID might recede, but the economic impact of COVID cannot be underestimated. And the wake of COVID, as I like calling it, is can perhaps last 18, 24 months. 46% of our customers are non-salaried. And we have to be cognizant that the kind of pain that they're likely to go through is not going to be trivial. Even when you look at some of the CMIE data, 5 million job losses in 1 month of July, and some 18, 19 million post COVID in the last few months. So that's the kind of avalanche that's still coming our way. And I think people are also aware, although Mr. Sushil Kumar mentioned about LIC experiencing good persistency, from our point of view, that's a place I would watch. People need to realize not to stop paying premiums. Yes, they are worried. There is a cash conservation mentality that we have seen, especially early on in April, May. And although our first quarter renewal premium grew by 24% and continues to do better than our first quarter, but I will still watch this space very carefully because it's easy not to understand this, easy to confuse this with discretionary outlay and to surrender one's policy. other point is he also mentioned annuity. So I do agree that apart from the immediate COVID impact, the overall risk averse nature is spiraling, and we are finding the retirement-led product, especially annuity, deferred annuity, seems to be catching on, and people are focusing more on it. It's lesser now, fortunately, a more IRR conversation or a market and return conversation, and veering towards risk transfer, which is what is insurance all about. I like that trend in terms of movement towards risk, and Kannan did make about sum assured. Again, very important in terms of the metric for us to be focused on. Digital, of course, everyone's spoken on that. And we again should not lose this moment, because insurance is not that complicated as it's made out to be. And anyway, all of us who are serious with to sell on digital will have to simplify. And that's a good thing. That's a good thing to make it more transparent, more intuitive. And data, use of data as the oil to make this digital leap is also beginning to happen. So you can't have a 16-page proposal form on an app. It's just not possible. So it's not just the tech, but it's also solving for a intuitive onboarding of the customer or intuitive servicing of the customer. So that all of those things mean that all of those things mean that it's a huge opportunity for us.
Yeah, thanks, Biva. I think all of you spoke more or less on the similar line, that things have changed but have not changed at the same time, and if has changed, is changed for the better. And the focus is on, of course, how the process is changing and all. No, but as a consumer, and our primarily the thousands of people who are watching us, primarily they are from the consumer segment and all. Can you give us a sense? I mean, maybe we can start with Tarun. LIC spoke about how the annuity as an instrument is now selling more. In this during this COVID time, the uncertain time, people losing jobs, people losing, not in the best of health, people even. So, is there any kind of newer products that you people are introducing in the market? Is this the time to innovate? Is there many proposals now getting into the IRDA sandbox? Can you give us a sense as a consumer, what can I expect from the industry? We'll start, Tarun, from you.
Sure. See, I'd say that there is a significant shift in the entire product landscape for the sector. And the remarkable shifts are particularly on, and that's been mentioned, but just to kind of personify that, is on the term side. And suddenly we find that a product which was, in the 1 to 3% of most companies, are showing up as a significant part in every part of the entire sector. It's not about one company or two companies. It has been like that. So somebody was focused earlier on this segment, but now it is coming across. So basically, of course, there's a consumer demand for that. Within that, the interesting bit, of course, is also the statistic that the average age of India is 27. So will people buy or continue to keep buying term products? That's something we'll have to evaluate. And I see a trend hence coming for return of premium term.
Okay.
Which is kind of showing up in statistics. It's not very significant yet, because ultimately the Indian is led by more greed than fear, if I may.
Mm-hmm.
So, abhi to fear hai, but will it continue like that? We'll have to see. But there is this thing about, if I take a term cover and, I outlive that time, will there be a purchase price that can come back to me? So that is a very interesting element that we're seeing. Vibha talked about annuities and deferred annuities. I think that trend is showing up. But the most significant trend, if I might say, is while we're a risk sector and we sell risk products, customers are seemingly a little loath on adding the market risk on their products today. As a result, unit-linked products, which is usually associated with wealth, has become a lot more conservative in its proportion, and it's actually coming down.
Mm-hmm.
So people don't want to add another uncertainty. The market, how will it be? And with what they're particularly seeing from or expecting from a life insurance company is certainty. Because we're providers of certainty, providers of long-term safety. The other thing that's therefore working out in this is that while ULIPs are going down, their position is getting taken by long-term return guarantee products.
Okay.
So, and the life insurers are able to play that arbitrage very well today, because all said and done, fixed deposits have come down so drastically, and to quite an extent, we are a vehicle of tax transmission. And if you take a 10 times cover, there is a tax benefit available to you. And life insurance companies are able to give a far better return post-tax now versus what you will get in FDs, because FD is looking at the short term of the curve. So as a result, we are able to do that, provide that tax arbitrage and the long-term saving curve benefit, return guarantees benefit. So these are the basic shifts that I'm seeing.
Thanks, Arun. Yeah, anybody wants to add? Kannan or Kannan, yeah.
Yeah, I just wanted to add a couple of points to this.
As a consumer, what are the new things for me on my table?
Yeah, the digital adoption. The digital adoption, Tamal, you summarized it in the previous round. That is increasing from a consumer perspective as well in terms of servicing. For example, if I look at the digital payout from the insurance company to the consumer, if I look at our own numbers, it used to be about 85% payout we used to do digitally. And in the last 4 months, we have actually done 100% payout digitally.
Wow.
If you look at the renewal collection, 70% we used to collect digitally, more than 80% we are collecting digitally now. And if you look at the customer self-help, it used to be in the 80s, now it has crossed 93%. So I think there is, yes, of course, they are confined to their homes and they want to find out more ways of interacting with the company. But the digital adoption is something which is going up even from a consumer perspective, which I think we need to use it as an industry going forward as well, because it got huge implications of customer reach and customer servicing. The last point, I think this is a moment of truth for us as an industry, because claims payout ultimately is the moment of truth for this industry. So I think from a consumer perspective, it's very important for us to communicate to them, yes, is COVID death covered in the policy? Yes, it is covered. How to reach us in terms of this pandemic for death claims, and how soon we are able to make the death claims. On an average, we've been making currently at 1.5 days, as against 30 days allowed by IRDA. I think those are the 2 points I wanted to add, the moment of truth.
Okay.
And the customer's preparedness and willingness to do more and more digital. I think those are the 2 trends we are seeing.
So the claim settlement has come down from 30 days to 1.5 days. That's what Kannan said.
30 days is what is allowed by IRDA as an outer limit. I'm sure all the companies do it much earlier than that.
And you are doing it at 1.5 days, right?
On average, yes, that's right.
Oh, excellent. And Kannan, can you also tell us, during this time, has the claim number of claims are gone up dramatically?
See, just to look at our own numbers, I don't have the industry number. So far, we have had COVID-related death claims of about 200 lives so far, out of about 60,000 deaths as of yesterday. Roughly 60,000 deaths we have seen in the country. As a leading life insurer, getting only 200 gives us, sad part of the story of the under coverage. That's what I would say, because this 200 claims is not going to move the needle for any big company.
Exactly.
Much less than what you would have anticipated in a pandemic like this, which shows a huge level of under-penetration in the country. And also, if you really look at the normal claims are actually lesser than what they used to be, non-COVID normal death claims. So on a whole, we are actually doing much better than what you would have expected. But to me, this is not something to be happy about. This is something to be sad about in terms of under-penetration, because we would like to pay more during pandemic to make sure that people are insured and families.
Kumar sir, LIC, you wanted to add? Kumar sir, LIC.
Yeah, I totally agree with Mr. Kannan on both the points. First,
sir, can you push right towards your right little bit? Exactly. Yes. Yep.
The first point is, as far as the settling claim is actually the defining moment in a customer's life. So every insurance company really takes care of that. And in a situation like COVID, the earliest we can settle the claim, the better it's going to be.
Yes.
They were talking about ICICI about 200. My data is slightly higher. We have received about 770 claims as on date for COVID, and most of them we have settled very quickly.
Anybody wanted to add in terms of innovation and new products during the COVID time? Yes, Mr. Kumar, Mr. Sharma from State Bank of India, State Bank SBI Life. Sharma ji?
So we are seeing a lot of interest in protection products. So we launched a product on the YONO platform of SBI last year. And this year, in the first 4 months, we have covered more than 300,000 lives on that. So that is a huge jump. And in July, we covered 100,000 people. So it's growing. Maybe going forward, like people were saying, we may see different trends because once the scare goes away to some extent, then maybe the behavior changes a little bit. But we still see that the buying of protection products online has gone up, and this is because the products have been simplified. So what one of the questions which I heard on the general panel, about the documentation and all that. So the idea is that insurance is a contract, so you have a long document. The policy document is definitely going to be a long document which covers all the clauses and everything. But to understand a product, you may not need to have so much. So a protection product, for example, what it covers and what is the sum assured and what is the period and how much I have to pay. So that is basically the thing, and a general health declaration or something. So we have made the product so simple that in 3 clicks or virtually 3 clicks, you can actually buy the product on the YONO platform.
Thank you.
These products are going to be the flavor of the this going forward, and that is the way to innovate. So what we are looking at is the entire process of onboarding and the forms. Like I think Ms. Vibha also said, nobody's going to fill a 16-page form online. So we are doing whatever we can to make sure that the customer's life is made simple while he's purchasing insurance. So that is one of the reasons why the penetration could be low, and that is where especially when we look at the B towns and the hinterland where we have a huge presence, we need to sell to everybody in India. So that is to make the product simplified, onboarding process to simplify that. That is the direction that we would like to take.
Thanks, Sharma sir. Yashish, you must come in there because you run a platform. You are company agnostic, so you are seeing customer behavior, you are seeing company behavior, you are seeing products, you are seeing processes. So can you tell us, are there newer products? What are the customer preferences?
Yeah, see, the Corona specific products, the Corona specific products, both Corona Kavach and the Raksha product, both have done very well in the sense there's large numbers of transactions happening on those. However, the demand is still, and the significant premium is still coming from term insurance. That is the biggest growth. The TROP trend, as was mentioned by Tarun, is there, but it's not so significant yet. The ULIP to long-term guarantee products shift is very clear. Customers are interested in the long-term guarantee return products, and we, Policy Bazaar, I think, did kind of go out quite a bit on the ULIP side and trying to promote the ULIP side, and been a little less optimistic on that side. We could have kept the focus on the long-term return guarantee products, and we are doing that a lot more and clearly seeing the shift in that direction. Annuity, deferred annuity, the demand is there. It is still difficult to conclude online because those tend to be large investments. In a sense, the person needs to invest a lot of money, at least in a straightforward annuity, single premium annuity. Deferred annuities, there is a possibility. So we're thinking through, what would be the right mechanism to capture demand and fulfill demand, the fulfillment require the online. I think, as I said, the challenge is still on the medicals and the documentation. I think the eKYC, ease of onboarding, needs to be improved. It's a fairly competitive. So the one thing I can say is it's becoming a more competitive industry. So a lot of players are pushing very hard, much harder than they had earlier, or much harder than the industry was earlier, in terms of improving this onboarding process. And in the last 6 months, we've seen dramatic improvements. So as I said, 20% additional digital onboarding compared to where I define digital onboarding as something that required no physical touch whatsoever. So that has shifted by 20% points, which is a big enough shift.
Thanks, Yashish. There are many questions are coming, and some of them are really interesting. We'll take them, but before that, we need to have a quick 2 rounds, and one everybody is looking for. Yes, the gentleman from LIC, MD Sushil Kumar. Big elephant in the room, your IPO. You are very conscious about your image now because July numbers, you just spoke about that all over the media, how you have done extremely well. So it's all in the run-up to the IPO, and then the advisors have been appointed. So can you give us a sense, Kumar Saab, where are you in terms of IPO? Definitely it's coming before, during this fiscal year, that's for sure it looks like. So can you give us a sense? And then we hear other competition like Kanan, Tarun, and Mahesh and Viva, because Yashish doesn't really matter, he'll be selling everybody. So how do you react to LIC IPO? First, you, sir, Sushil Kumar.
Sir, IPO is a story which will take some more time to fully unfold. Everyone knows it is handled by Deepam in the finance ministry. Phase 1, there was an RFP for transaction advisors, and finally 2 firms.
You talk little louder, sir. Kumar sir, little louder.
Yeah. Deepam is handling this IPO thing, and the first step is 2 transaction advisors are appointed now. You must be knowing that by name now. The next step could be the selection of an actuarial advisory firm. Then the next in the sequence could be evaluation. Then come some more disclosures. Then the red herring prospectus. It goes on. That is the process. From LIC side, maybe we'll have some more extra regulations to comply with. Maybe we'll have to do some more disclosures. We'll have a whole set of new shareholders, and we'll have to handle their expectations. We have come across many challenges all along, and I'm sure we'll overcome this one as well. Regarding time frame, I think I'll not be able to make a comment on the time frame because it's handled by government and LIC together, and as such, I'm not clear about it.
So Kumar sir, I mean, can we expect it during this fiscal year before March 31st?
That is the intention, but I'm not sure whether it will happen or this year or not.
Okay. And second thing, Kumar sir, the valuation part that we are talking about, like there are newspaper reports, it could be even ₹1 trillion, 1 lakh crore. Is that the kind of internally you are looking at? Or is it even more? It could be even more.
It's all guesswork or some analysis of data. We have not arrived at any such figures yet, which can be disclosed.
Okay. Tarun, Kanan, Viva, like when LIC comes and is a listed entity, how does it really matter to you people? In the sense, is it more competition or what? What does it mean for the private sector? Viva, yes.
So we absolutely welcome it. LIC is the biggest financial organization that we have in our country, and listing would just mean extra level of disclosures, lot more transparency, lot more FIIs over a period of time, because right now it appears that government is only going to divest perhaps 10%, reading whatever in the papers. But eventually, I'm sure there's a roadmap to at least 25% public float and so on, which means it's just the growing up of the sector. I was hearing in the media yesterday about how insurers are now coming into their own as a sector and not being an apology for a bank or some other financial services. So now you have analysts who are tracking insurance companies. So LIC listing will just add tremendous weight to that, and yeah, very much welcome it.
Anybody else want to add something? Yeah, Mahesh Sharma, sir.
Yeah, I agree with Ms. Vibha. We would welcome that. It would be, we'd also get to know more uh, everything that LIC does. So that I think is good for the industry. It is probably good for the country also, because there are so many things that LIC is doing. So the whole thing, listing brings along with it a lot of other things. So it will be a very nice thing to have one more listed entity here.
Okay, both Biva and Sharma ji, they did not mention. I mean, they actually the LIC would become more transparent. They will tell the world why did they invest in IDBI Bank. Those are the kind of things. You did not say this. I'm putting words in your mouth, but you probably meant it. Good for the economy, good for the industry. Yeah. Anybody else want to add? Tarun?
I think
Kanan?
it's my response would be a ditto. The same. I agree.
Kanan, you want to add anything?
Yeah, I would also say that it is positive for the sector as a whole. It's a very welcome step. In fact, the industry will become even more researched, and it will become even bigger asset class for the investors to participate. So it's good all around.
Okay, good. So one area, it's we raised it in the previous panel, which was with the non-life insurance companies. There is a bit of confusion why I say it is this. Basically, it's indemnity versus the benefit, that the health issues, where up to 3 years primarily it's a one segment, and beyond 5 years, which the life insurance company is taken care of. And now it seems that you people, meaning life insurance industry, also want to get into that health segment in the shorter end. And IRDA has created a committee where Viva probably is a member, if I'm not mistaken. So can you give us a sense? There seems to be a conflict between life and non-life, because health insurance says that it is our turf. Why should life insurance come in the picture? And you said, what's the harm there? Both of us should be there. So what exactly is happening? And as a consumer, I'm slightly confused. So Biba, maybe because you are a member of the IRDA committee, you will start, then maybe we can hear Kannan and others. Biba.
Yes, certainly. So just as a going back in time, we had it, like you mentioned, and that was taken away without a lot of explanation as to why it was taken away. There were companies.
Can you give us simply for the audience who do not know, those who do not know the background, in a simple 1 minute explanation, what does it mean for them?
Yes. So what it means is that indemnity product, which is like a mediclaim. So you spend something and you get at the hospital because you are admitted there, and the insurance company pays you most of those bills. That's what indemnity product is. That was taken away from life companies. And so we thought that this is the missing piece in our offering. Today, you have to make the customer run around. For this, you come here, and for that, you go there, and so on. And we thought that it will complete the offering without really cannibalizing. Because like you said in your opening remarks, the level of penetration is woefully inadequate. So yes, LIC and us and HDFC Life were part of this committee. Unfortunately, I think there is a protection of turf, if I can say that, and nobody wants to give up. And there was a fear that if life companies are allowed in this space, then there is a problem on turf. And this is one of the segments that was making, and still does, is quite lucrative. And so while I would have liked to say yes, we've got it back, and there were certain via medias wherein I did suggest that okay, let us not be allowed to do indemnity. Let us just allow me to do this as part of our offering. So if I'm selling term and I'm selling, say, cancer care, allow this as well as a bundled offering. We'll have to see what is the final outcome in terms of recommendations, but I'm unfortunately not very hopeful.
Okay. Kanan, you want to add?
Yeah, it's Biba saying she's not hopeful is not a good news for any of us. But my perspective is that it is not that we are asking for it. We are asking for the position to be restored. As Biba mentioned, prior to 2014, we were doing it. And even today, those indemnity policies we are servicing. So it's not that we don't know the business, not that we have not handled the business. And I personally feel that human morbidity is closer to mortality than automobile or a crop. So I think from a expertise perspective, we know how to handle, and we've been handling it for a living. Human morbidity is closely linked to human mortality. So that is something we are supposed to be having an expertise. And the fact is that look at the distribution, Tamal. We have about 1.2 million agents of LIC, about 1 million agents of private sector. If all of them sell this product, then it is a very underinsured market. Health underpenetration is even more severe than the savings and protection linked underpenetration. So look at the way LIC balance sheet will change. Look at the way the insurance penetration will increase in the country. So from a need perspective, also it's important. From expertise perspective, we can do it. From a distribution perspective, we can make a difference. So those are the points. But I hear what Vibha is saying. So we'll have to keep our fingers crossed and wait.
Okay, as I said, there are many interesting questions. We'll take few of them, not all. But before that, I want 1 minute each from, and Viva will start with you because in the beginning you were the last speaker. You tell me, all of you are saying almost similar thing that, well, we have nothing to worry about. We are solvent. We have, our business has been growing. We are one of the most resilient sector, nothing to be worried. And if at all COVID is actually giving us a momentum, for expansion, for in a different way, digital expansion, what I mean, and more and more customers are coming. So everything is positive, you said. But you see that in every way, you look at the customers, the way customer behavior, you look at products, you look at your managing your own offices, your own employees, your own work culture, and managing your balance sheets. So whether you accept it or not, things are changing, have changed, will change. So can you give us a sense, maybe a year down the line, 6 months down the line, and year down the line, on this 360 degree, your products, your processes, your customer interaction, your own office running employees, and your balance sheets? I know it's a tall order, but in a very, very, very small way, a few sentences, starting with Viva, and after that, all of you, and then we'll take a few questions. Viva.
Yeah, so basically you're saying all our stakeholders apart from shareholders. And there I'll start off with employees. I think employees have been through a lot. They are now very comfortable working from home. Having said that, a mental stress is quite a bit. We do have a helpline today, and I'm happy to say that 49% of the callers are men. I didn't think that would be the case. And they're using it to the fullest, all sorts of things of stress of working from home. So those kind of things are very, very much required. A fear of themselves not being adequately insured, and so on. Mumbai, wherein you have very small houses, they're not geared for work from home, especially for a couple, and kids are also studying from home, and so on. So it's a tinder box. So that is as far as employees are concerned. If you look at infrastructure today, out of my 421 branches, easily I can give up 100. And this is even longer term because customers have also started getting used to dealing remotely. And I like Kannan mentioned that a customer today does not need to walk into a branch for anything. He will walk in eventually because he feels comforted and so on, but he does not need to. So there's a paradigm shift in the way we are looking at servicing customers. If I were to look at our corporate office, out of the 4 floors, I can easily give up 1 floor today without even too much of Excel spreadsheet kind of work as to who will sit where and so on. Easily I will give up. So those sorts of things wherein I would not have dreamt that India Inc. Financial Services could sit at home and work. Okay. And what a change, right? It has happened.
Thanks.
So these
Sushil
changes, I think, are very, very stark.
Sushil Kumar Saab, you have the maximum number of employees and the agent base among all. Tell me, how do you visualize this new world?
The first point is the digital side of servicing as well as procurement of business, both will really pick up. Point number 2, work from home, work from anywhere. I think that tendency will be established and it will continue. Regarding how the business will be, I think by Unlock 4.0, maybe 5.0, October, November onwards, I think things will be back to normal. Definitely, when too much of digital servicing is done through digital, there could be a few employees who may not be required, but we as an organization will ensure that those who are on the servicing side will definitely take up more of marketing assignments and help us to penetrate the market. And the last point is, whatever we do, the agency channel is here to stay. At the end of the day, face-to-face conversation, and some kind of persuasion will definitely help insurance market.
Thank you, Sharma ji. Sorry, sir, carry on, please.
Thank you, sir.
Okay, Sharma ji, SBI Life.
So, basically, going forward, we don't think that human intervention will disappear or something. What will happen is that most of the products which can move and in the markets, which are digitally savvy, will move into more into digital space. But then the human element will be very important. So we do not look at reducing the number of branches or the people or anything, but it has been our endeavor always to increase the penetration and increase the spread of insurance. We will continue with that, and I am sure that all these people can be deployed to sell more, a bit like what Mr. Sushil Kumar said. So that is some shift that we can think about. But then the idea will be that it's not all roses on the path, but what we are looking at least in the insurance industry, is that unlike the other industries, we don't have a challenge of demand or of supply. So the whole thing is that 1 year down the line, if you ask me, if as Mr. Sushil Kumar predicts that around October, November, we should be back to normal, then I would also expect a normal year. So we'll probably be around the same place next year. But even otherwise, given 2-3 years down the line, I don't believe there's going to be another pandemic of this scale, or we would be so unprepared for any such thing. So maybe 2-3 years down the line, we will see reasonable growth.
Thank you. Thank you, Yashish. You are always running a tech platform, but whatever you are seeing as an observer of the industry, insider, outsider kind of perspective. Yashish?
Yeah, so I totally agree with ma'am that work from home was something we did not think would happen. It's happened. It works very well. Digital is here to stay. Real estate requirement will go down definitely. With digital, sir, two things happen. I think transparency is coming in. Customer activation is going to grow with the younger customers getting involved. Self-help is going to grow. I unfortunately have a poor prognosis for the offline presence, or the entire. I think the industry will move more towards being consumer-centric than being distributor-centric. The industry has been very distributor-centric historically, and I'm a distributor, and I'm saying that I think the industry will be over the next 3-4 years forced to become far more consumer-centric as the consumer demand starts to become a part of the industry.
Thanks, Kanan. ICICI Pru.
Yeah, so from my perspective, I always say that we all come to office with both our head and heart every day. And this is a time we are doing a little bit of more heart than just head. So that is how we are coming to office. So in the context of your stakeholder handling question, employees, we are much more compassionate today because, as Biba rightly mentioned, there is a fatigue setting in. Working from home is not so easy. Fatigue setting in. There are physical health and mental health issues. We have also instituted a helpline. In fact, not just doctors, but also counselors. More than 500 employees have taken advantage of that. So that is on the employee side. On the customer side, as an industry, we have a great opportunity to pivot back to purpose, because our purpose is really to be handling the security, financial security of families. And these kind of pandemics really, reiterate that pivot to purpose for us. And balance sheet question you asked, I think 1 year down the line, if I can speculate, all our balance sheets will be even more resilient. That is what I would see. And finally, two wishes I have. I'm going to borrow from one from Tarun and one from Biba, actually. Tarun mentioned very eloquently, if the industry becomes from push to nudge and eventually to pull over the next 1 or 2 years, that would be great for all of us. I think push to nudge is a good takeaway from this discussion. And Biba mentioned that no crisis of this magnitude should be allowed to go to waste, both from a customer perspective as well as from a company's perspective. If we all allow this crisis to go to waste in terms of actions to be learnings and actions, that would be a shame. So that is something which I sincerely hope doesn't happen. Those are two wishes for me.
Thanks. Thanks, Karan. Actually, you have done my job. You have summarized so nice way the entire discussion. Tarun, you are the last speaker. Then you will take a few questions.
Okay, so see, I'll
Tarun Chuk from Bajaj.
Yeah, I largely agree with everybody, but I mean, let me just give it a different spin. I think what I've seen in this time is how we hire, who we hire, how we manage, how we control, how we motivate, how we sell. I think every part of our management has come into question, has rejigged entirely. Today, when we talk about how to hire, I mean, I've not physically met a single person. We've last 5 months and we've been hiring continuously. And who we hire, there are significant moves now. Why should we, work from home environments, have somebody who's not a gig employee, in a sense, who works only for a certain period of time on a project for, let's say, 6 months or maybe even a year? Could be a part-time employee, could be an employee who's only going to get structured differently, maybe a low fix and a higher incentive. I think that's area we are evaluating particularly. How we manage, I think work from home has come true. The interesting bit would be when our sales teams, which are largely run like armies almost, where the general says something and controls the entire bit, has relearned how to work now. Today, all these guys would usually have big darbars, getting people in, giving sermons, and as Kanan also said, being very pushy. Now I'm saying everybody is trying to work from the heart and not necessarily call people. So we are actually going to not cut down branches, but we are going to reduce our square footage. We are coming up with a concept of shoppies. Maybe saying we'll have, instead of a 2,500 square foot place, we'll have a 300 square foot place. You work at home, come sometime in office, and you're going to be on the move. So, and we're trying this with Bombay. I've seen most of my employees live in Mira Road or Malad, but may come to our fourth branch and then put their hazari and then go and meet a customer. They don't need to do that. They've not been doing it, and it's been absolutely fine. So I think the fact that the branch manager doesn't have to have his army sitting in front and controlling is a big one. I've been able to conduct motivate my agents like never before. It's so much more easier. Normally, if I would conduct something in my Andheri branch, I would have people coming from all over and spending time, petrol, parking, this, that, and the other. Today, I can and usually you would get 1/3 of the people. Today, I mean, I take this session for example. You've got lots of people coming in. We can do a lot of these training sessions, a lot of the motivation sessions, so effectively. I've had sessions where thousands of people have been, kind of been there. The other bit is the way we manage our costs. So I think this has been a period where, yeah. So we've not been sure of the top line, but one thing you can be sure of controlling is your cost. So we've been able to focus on lesser things, and be able to say, okay, what are the must-haves and good-to-haves, and just concentrate on doing lesser things better.
Thanks, Tarun. It's a very, very good insights into the industry we get. How are you managing? How are you changing yourself? Thank you. But just we are 6:29. Let's take a few questions. There are many interesting questions, but we don't have so much of time. Let's pick a few which are interesting and useful. Are you, I mean, anybody raise your hand and you want to answer anybody? Are you also like banks? They have been given moratorium on the loan repayment for the last 6 months. So is the life insurance companies also, are you offering moratorium on meaning a consumer's premium payments? Is there any kind of moratorium on, are you offering? Yeah, Viva, yeah.
Yes, there was. Fortunately, it was not extended. And reason is that our moratorium was worse off than bank moratorium, because there was no downside to the customer whatsoever. There was no penalty for late payment.
Okay.
So why would it was a disincentive to pay your premiums on time. So fortunately for us, it wasn't extended.
Okay. Anybody else want to add anything on that?
Just a couple of
Kanan,
just at that time till June there was an extension of 2 months which was given, which was quite handy for the customers to pay, which some customers used of it and went off well. But as of June, as Biba said, after that we don't have any extension of that. And I also believe that unlike a bank moratorium, here this customer is paying the money to protect his money. He's not returning somebody else's money. This is quite a different situation compared to a banking situation. So to continue to have a protection, this is like a first item which will be paid to an insurance company before you come to other discretionary expenditure. So to that extent, experience has also been quite good in terms of actual renewal premium coming into the companies.
Sharmaji, you wanted to add something?
Yeah. Basically, what I was saying was that, before the policy lapses or something, there is a time period, and even after it lapses, we do have a provision for them to pay and revive the policies. So, we don't really need to have a moratorium kind of thing. And as Ms. Vibha said very correctly, this is something which will cause people to, drop off, and which will not be very good for them. So,
okay. Two questions related to digitalization kind of thing. So all of you said that more and more digital, less interface and all. Does that mean that you don't, the agent, like everybody, LIC talks about millions of agents and all of you talk about the agents and all. Does that mean over a period of time that the agents will be less relevant for the industry? Who wants to take that? Mahesh, Sharmaji, all of you. Sharmaji first.
Yeah, so very, very interesting question, because what happens is that in life insurance, unlike in many other things, you have to explain a lot of things to the person. It's it has been largely a push product, but then even without that, you have to explain the features of the products. For example, you have the savings products. So you have to explain to them what are the conditions in which, what are the kind of returns they will get, depending on what are the clauses there, and there are so many different variations in that, and it is not very easy for a person to understand a product without actually having a face-to-face or at least a conversation with an agent. So I don't think the agents are going to go anywhere. And looking at the penetration, I think we'll probably need more people going in the future to explain to more people. So even digitally, you'll need people to support.
Okay. Sushil Kumar Saab, LIC, we must hear you. I mean, this question is this: with more digitalization, will the agents become redundant? Sir, yours. LIC.
Not at all, according to me, because 63% of the total premium is coming through the agency channel, and for LIC, it's about 90%. Even if it is a push, even if it goes up to nudge, I think in both places, the intermediary plays a key role. What Mr. Mahesh Sharma said, there is some conversation happening, behind a very forceful conversation happening behind every insurance transaction. As Yashish was telling, if it becomes totally consumer-centric, maybe that day it will happen, but that day is far off. At least for quite some time, agency is here to stay, and they stay strong.
One related question, and maybe Biba, you wanted to add, please. Biba?
No, very quickly. So it's not whether agents are going to stay or not. Of course, agents are a fabric, integral part of insurance, but it's how they connect with the customer will also evolve. They will embrace digital, and today I find that our agents, who I did not think, frankly, would embrace technology, are the forefront of embracing technology. So that is the combination that I would see emerging.
Okay, thanks. We'll take two more questions. One is related to this. Now, if somebody is buying online insurance product, why would the person need to pay the same amount? Because if you see the other products, just to give an example of the gold bond, which comes, the Government of India product or Reserve Bank of India sells it through banks, where if you buy online, then you get some kind of discount, 50 rupees less or something like that. So why not for insurance is the same price whether you are buying from an agent or from online? Why not there is no difference in pricing?
Sir, I think this is a topic.
Yashish. Yeah.
My view is the customer who's buying online is not interested in getting just 2 rupees reduction, etc. It will only cause confusion in the industry. that whole idea that you will get 2% less or 1% less online, all it has done is cause confusion and caused animosity between the online and offline channel. I think the product can be, and also let me kind of put a kind of spanner in the works on that. See, the largest cost of insurance, I believe, especially if you're selling protection, is not distribution, it's going to be claims. I would typically say any protection product will have 70% of its cost on claims and about 20% of its cost on distribution, broadly, any protection product you look at across the world. And I think authenticity of data, authenticity of disclosure, those are far more important parts. And if an offline agent can bring that, as well as a digital agent, or as well as a digital platform, that's fantastic. If you want to take my prediction, the problem with the agency in the longer term is going to be disclosure of product and disclosure of customer for buying what he is buying. That is the fundamental problem. It is not the cost of distribution. Cost of distribution exists in online also. You go and list on Google, it will cost you a lot of money. So companies have to spend on marketing. They have to spend on which digital company is making profits. Every digital company in the country is making losses. So there is no cost reduction, but there is a higher disclosure, and that is very critical for insurance. And I think that's the most important part.
Okay, thanks. Tarun, you have a different point of view?
Not a very different perspective, but maybe a different way to look at things. So see, the IRDA actually allows us to have a differential price between online and offline. In fact, it usually insists. But the point is, this gap has been narrowing over a period of time. And we also realize, and I think I'm very happy that you hear that from Yashish as well, that there is a lot of cost on digital. The cost of buying more words today on an engine, on SEO engine, or the amount of content you create is so much higher than sometimes even trying to run the agency channel. So if you really do a true cost analysis, digital actually does come sometimes even costlier than face-to-face. So while we keep that little notional bit more because it's regulatory required, I think that reality is something that has to dawn upon people, that it's no longer very cheap to promote online.
Thanks, Tarun. The last question is this: because of the environment and uncertainty and the risk perception, do you people see that more and more people are veering towards buying what are essentially the assured return products? Is this the trend? Anybody? Viva, you raised your hand, Viva, and then anybody else want to add? That's all.
Yes, I think people, there are 4 parts of risk. There is mortality, morbidity, longevity, and the 4th is interest rate risk. And the people are slowly understanding that only buying, say, a bank fixed deposit, that's also a good product, but doesn't take into account reinvestment risk. Especially if a person is 50 and going to retire at 60, 10 years to go, maybe interest rates by that time will be low single digits than where they are today. Do you remember when LIC used to give 12, 13 and even higher returns? So this fear is there. And how do you lock in? And companies are able to do this. So yes, I think it is topical. Very important that companies manage risk. Very, very important, because one bad apple could bring a lot of unintended consequences to the market.
Thanks, Viva. Sharma ji wanted to add?
Yeah, basically we did see a trend of more guaranteed selling. But then what is happening is that we are also seeing a trend of ULIPs coming back. So, in the last two months, we have seen ULIPs bouncing back. So it's not as if people are wholesale veering towards that. I do agree that, a guaranteed product definitely, comes on top of the mind at times when the market tanks and people are worried about the returns. But then it depends on your funds, how well they are doing and what are the NAVs that you are providing on your products. So
thanks, Kannan. Yeah, thank you, sir. Kannan, you wanted to add?
Yeah, I would just like to supplement what Mr. Sharma said, that the last few months we are seeing some sequential momentum in ULIP as well, especially on the debt side. The ULIP returns have been outstanding. And if you look at our own case, 20 years, 0 NPA, it's really good for the customer. and equity also is coming back in the ULIP. So we are seeing some sequential momentum there because it's a transparent product, but one has to be very clear why a product is being bought. You have to look at its age, look at the asset allocation, and buy it towards a goal-based saving. So that is more.
Mr. Kumar, LIC, you have the last word. Tell us.
I agree with Mr. Kannan, both the guaranteed return as well as a ULIP. I think both will stay.
Lady Biva and gentlemen, Sushil Kumar, Mahesh Kumar Sharma, Kanan, Chug, and Yashish, all of you, thank you. And we had quite an interesting discussion, I must say, in terms of products and processes and future. So if you ask me the key takeaway, things have changed, things have not changed. Essentially, all of you are saying that the industry is resilient. There is nothing to be worried about. Things were bad in April, but things are getting better. And you are saying you are coming back to normalcy, and probably by the year end, you will be as good as last year. Meanwhile, the systems, processes, products, customer interaction, everything is changing. And you are saying that what Kannan repeated, two things, and I end with that. One is this, from a push product, now it has become a little nudge, and probably a few years down, it will become a pull. People will come on their own, and you are not going to waste this crisis. This is a big opportunity to, I will not say reinvent, but to do things in a different ways, which you are doing by cutting costs, by allowing people to work from home, by focusing more on digitalization, by introducing newer products. So thank you again. We had a fascinating discussion. Thank you, our audience, for being so patient through 2 long discussions, 2.5 hours plus. Tomorrow is the last day, the final round. I'm just repeating, tomorrow 10:30, RBI Governor Satyakanta Das will give his keynote address. Will be followed by a sort of fireside chat with the governor. And then we have big banker show where large private, public, and foreign banks will participate. And finally, we'll have a conversation with two CEOs of two largest banks, the largest banks in India, HDFC in terms of market cap, and State Bank of India in terms of assets. So from 10:30 is a packed show, starting with central banker and then with bankers. That's it. So welcome back tomorrow. You have a very good evening, all of you. Thank you.
Thank you. Thank you very much.
Thank you. Thank you, everybody.
Thank you.
Thank you.
Thank you, Tamal, and many thanks
He's
to all
making
our
his investments talk.
As we end the penultimate day of Unlock BFSI 2.2, we are grateful to leaders and influencers across BFSI domains who joined us over the last couple of weeks to unlock the way forward for the sector. Thank you, SBI Life, Reliance General, and HDFC Life, our partners today. Big final day coming up tomorrow, like Tamal said, from 10:30 a.m. You have been a great audience. Goodbye for now. Take care and see you tomorrow morning.
He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming a brand. Business Standard. He's making his investments talk. Business Standard. He's making plans for an early retirement. Business Standard. She has ambitions of becoming a brand. Business standard. He's making his investments talk. Business standard. He's making plans for an early retirement. Business standard. She has ambitions of becoming a brand. Business standard. He's making his investments talk. Business standard. He's making plans for an early retirement. Business standard.